and we'll request Ketan sir to first address and Piyush bhai also, and then we'll start the session. So Ketan sir.
We play motto or we are not playing? I don't know. I mean,
no, we don't play the motto.
Acha.
So
we can play today. We can play today.
We can play.
Yeah, let's play.
Motto play. Motto play karo.
Should we stand?
Yeah.
Of course. That is stand.
To stand.
Motto is तो.
मैं बोला वो सेट कर रहे थे ना, उनको भी पता नहीं बोलते हैं.
Circling because here non-chartered accountant, chartered accountant.
No, I understand. Before each program, generally we play our ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं कापुरुषो निर्विमाणः तदेव शुक्रं तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता
Thank you. मिश्रा जी फाइल चेक करो थोड़ा, आवाज में कुछ प्रॉब्लम क्यों आ रहा है? नेटवर्क का इश्यू है.
Come on that side.
Welcome, sir. Thank you. Before I talk, may I request Honorable Vice Chairman of WIRC, Piyush Bhai Chandak from Nasik. I request her to first address all of us.
Thank you, Chairman sir. A very good afternoon to all the esteemed members of this study group. Good afternoon, all of you.
Good afternoon.
Yes. Basically, we as an office bearer, every year we get only 1 year to perform and to do things what our chairman sir give us a direction, and in that direction, like we take up our all activities. So this year I have been like the chairman of 2 committees. One of that is the CSR committee. So I just wanted to abreast all of the members about one of the important initiatives of this CSR committee. You must have heard or you must have gone through the flyer which recently we have sent about one of the important project we are taking up in this committee, termed as Seva Sarthi. So have you seen that flyer or not?
No.
Okay. So we'll just share it with you again. But about that project specifically, as we know that CSR word when comes up, we think that it is about donations and taking up or giving donations. But as a regulatory body, ICI doesn't involve this kind of activities. But at the same time, having this committee and doing regular task of updating the knowledge of members about this particular subject, we thought to take up some new and novel idea, and our chairman sir guided us in that idea too. We have come up with a project wherein we are trying to involve our members on 3 fronts. 3 fronts I will say because first front is all the chartered accountants and all the NGOs who are working around are connected with some or other chartered accountant. So the chartered accountants, we are expecting all the chartered accountants to refer 1 or 2 NGOs or whatever NGOs, number of NGOs they want to, who are compliant. NGOs who are compliant, who are ethically working. Those particular NGOs we are taking applications from for the purpose to screen all those applications from the on the second front from the volunteers from again the chartered accountant front who are experienced and who are expert in this particular field. So all the applications from NGOs will take up. All the volunteers who have thought that they will give the service to ICI, they will screen all those applications. We will again have another way of screening by way of a vouching from the local member over there where the NGO is working. By that way, once we find that this NGO is working good and it is eligible to get CSR fund, we will create a list at WLC, a screened list, and we will go on the third front, that is the donors. So again, chartered accountants are connected over there as well. So we'll request all the chartered accountants that wherever they feel that they can connect us to those front where CSR funds are like they want to give donations to. We'll try to bring and bridge the gap between those NGOs and those corporates. And by that, we feel that even though we are not into taking up funds and all, but still we can create a bridge between those two particular good ends, and we can create an impact on the lives of people at large. So, like people around will also feel that CAs not only do work in taxation, but they are also enablers for getting funds for the eligible NGOs as well. So this is one of the important projects we have taken up. And I think once this project takes up good shape, it will go a long way.
Very noble cause.
Very noble.
Really
Very
happy
good,
that
very
you
good.
have shared.
So it will be the satisfying thing for all of us volunteer for that. Again, another initiative which ICI has come up for this year for the first time is promoting work and life balance amongst chartered accountants. And Ketan Bhai said that you should take up this committee because you yourself keep yourself fit. So I'll request that you take up activities for members also at large. So we have taken up various activities on the front of health also, on the front of eating good habits and all, having mindfulness or something like that. They are again open for the new ideas or new initiatives which can get this for the benefit of
Very good, we are
members.
not aware of this. Good.
So under this committee, we can take up those initiatives. And again, this is another, sir, I can say an instance wherein I can feel proud of my own institute, wherein we have not found any professional body to think in a formal way about promoting work and life balance among their own members.
Absolutely.
Otherwise, nobody like recognizes also that there is a stress. And this
That is
stress
the
can be
yoga day
taken-
that we.
Yes, sir.
We know wonderful.
The first staff in this building.
Started. This is very good.
Yes.
Mr. Nilesh Bhai has been encouraging that.
Yeah, sir has sent me message also
Huh.
that organize one session of Manoj ji. Last week, I think he has sent me.
Okay.
So again, sir, on this front also, we would like to work with all of you. With this, I thank for the opportunity. I will not take much of your time. There are many initiatives which even our chairman sir will also share with you. So with this, thanks a lot for the patient listening. Thank you very much.
Thank you, sir.
So we are attached to district even woman of Rotary.
Yes.
So Rotary is doing wonderful work that you know about, and around 500 crore worth of projects we are doing in MMRD only. So our district chairman, I know very well. We'll meet chairman sir and
Sure,
let
sir,
us see
sure.
how it can be worked.
Definitely, sir.
You can also be with that.
Sure.
So on 7th and 8th of November, when we have a national conference on capital market, we are planning there only at Terapan Bhavan a blood donation camp.
Oh.
There also, if Rotary wants to join, we
Yeah,
can
yeah,
join hands
absolutely.
together. That's the.
So Rotary
process.
Kandivali can you go join because Terapan.
Maybe you must be knowing them.
Yeah, I know them.
Just check with them. We have told to Lions also that you all want to join, then join. Up till now, we have not got confirmation, but we are open. I mean, any NGOs want to join, they can join over there. All expenditure, everything will be incurred by ICI. We do not
Yeah,
want any
good.
funds from anyone. Our target is only just, we need around 200 bottles.
So
That is.
the audience of that particular Kandivali East area can come and
Yeah.
donate the blood. That is
So we are
what-
targeting some 200 bottle blood.
We'll tell them. 3-4 Rotaries around that Kandivali area, they can come and join.
You can take leadership. So that
Yeah, I'll of course.
So friends, let me thank Piyush Bhai for sharing about both the new concept which ICA has introduced, that is work and life balance, as well as this concept of Seva Sarthi, which is WRC's baby. And we have been, receiving a lot of good response. We will be doing a strict due diligence of those trusts before we take it to any corporate. And wherever you people are auditor or you are connected with such listed companies who are doing CSR expenditure, please tell them that WRC will vouch and do a strict due diligence of those trusts, and then we will take it forward. So wherever you all are auditor, independent directors, or you are connected with any listed company who are doing CSR expenditure, we will give them a list of genuine trusts which are authenticated. And we want this to take off this project. We have been getting good feedback across, but still we are working very hard, and we will see that the result comes on this project. Coming to two new things which at ICI level have happened. One is there is a scholarship fund which was 100 crore earlier, now it is 400 crore. So a student whose family income is less than 5 lakh rupees. So if you come around any such needy person, maybe your housemaid, your office person, your घर पे कोई काम वाली का लड़का हो, and any child who is doing CA and needing scholarship, having family income less than 5 lakh rupees, at foundation level we are giving 1,500, inter level 2,000, and final CA level 2,500 per month. So, if you make the application through WIRC, we will check and process and send it to that. Second is on CABF front, ICI is doing a great job. In last 5 years, 1698 families have been helped, and almost 26 crore rupees ICI has given to this 1698 families who, because of whatever reason, their chartered accountant expired and family was in financial need. There are two different schemes. One is per month, some 15,000 is given, and in another scheme, some lump sum 3 lakh rupees is given. So in whichever way the family makes an application, again, the checking is done about family income, who is doing what, and then thereafter, those applications are recommended by regional council and sent to CABF trust. So there also, I request all of you to generously contribute. We have kept a QR code down. You would have seen a standee when you enter, so that members are aware that there is a mechanism and you can contribute to CABF. So this is one request, and whenever you have good occasion, birthday, anniversary, any other good occasion in your family, contribute to CABF. We do a very genuine spending to all our brothers' family who are in need. So keep this in mind. There are n number of instances where we have come across and which needed those financial support. I keep telling two instances which when I became chairman, instantly which came before me. One was a 33-year chartered accountant expired by heart attack, and his father is working as a watchman in Daisar.
Oh.
In another case, there's a female who got two child. CA expired at the age of 47, and she's working as a bouncer. ICI last year helped 15,000 per month, and now again we are helping 15,000 per month for another year. So these type of many cases are coming, and we want this fund to be at 100 crore. The Honorable Vice President sir said that let's keep the fund to 100 crore, and we are all working hard. WIRC has got a target of 25 crore, and we have met all leading chartered accountants, including Hiranandani sir, Ramdev Agarwal, Kumar Mangalam Birla. So any other CA which you feel where you can connect us, please tell us, take their time. We will come and appraise them about CABF and request them to also contribute. That is where you can help and support ICAI so that these funds can be more strengthened. WIRC has started two more new initiatives. One is Nyay Setu, wherever any member is receiving any show cause, be it from CNAG, RBI, SEBI, SFIO, ED, and they want to make some reply to show cause. Let's say I'm an auditor or I'm a member and I received a show cause from GST department. Now I don't know how to draft a reply to show cause for any liability. There have been illegal detainment by the GST department. In such cases also, the chartered accountant required support. So at WRC level, we have 150 plus volunteers who will support on various issues. As and when a member need any help, the WRC volunteers pro bono will support all these people who need this drafting, who needs this support. Another good initiative is Bhairavi, which is again a brainchild when we were, going to the branches in the last year, in the last term, we realized that we need to do a lot of work at the school level, college level. Apart from our routine career counseling, we do tax and finance literacy programs over there. So the concept is, when we do the program at the school level, we will do the program about self defense, good touch, bad touch, and especially for female child. And that is where the connect of ICI will start with the bachas, and they will also have the benefit of these type of topic. So we have started a new concept, and we request again, wherever you have connect with the school, colleges, tell us. We have a team who will organize the self defense program, who will organize the session on good touch, bad touch, and the female chartered accountants will go to the colleges and school, and they will try and make an awareness about this. So my again request to all of you is to support in terms of getting us connected with the school and colleges. Last but not least, if you are not enrolled, enroll for our biggest program, that is the regional conference happening at Geo on 19th and 20th of December. Currently, it is at an early bird price of 4,500. The cost of program is almost 10,000 rupees. We have kept an early bird for first few hundred CAs. 4,500 is the early bird fees. So requesting all of you to register. Already Ramdev Agarwal has confirmed. Nilesh Shah has confirmed from Kotak. I'm just giving you two names of your area, BFSI area.
Correct.
So you all know these are the people. Anil Singhvi said that by Monday or Tuesday he is going to confirm. So maybe we'll have a fireside chat between Anil Singhvi and Ramdev Agarwal and Nilesh Shah. That kind of some format we are working out. Apart from that, the income tax, we have Girish Ahuja sir. GST, we have Raghuraman sir, who has fought Safari in Supreme Court. So 5 past presidents are there who is going to talk about the future of CA profession and what is going on international front at IFAC level, CAPA, SAFA. So there will be one dedicated 30-minute session. Many of our members are not aware about what is happening internationally, what is a body called IFAC, what is a body called CAPA, what is a SAFA, and what actually they do, and what is ICI role over there, and what is how ICI is working at international level. We see many of our CAs are going abroad, doing a lot of activities, but how can they be connected with these international bodies? So one session will be on that. Many more other parallel track will be there. Of course, one dedicated track, one day, 2 sessions are there on BFSI, where we are going to talk about fundraising opportunities overseas, as well as about SME IPO. Several such sessions are there. Almost 30 plus good speakers will be there in this conference. So requesting you to make an awareness to the members also, so that they enroll. With this, thanking Mayur Bhai as well as Alok ji for sparing their valuable time, and thanks to all the pillar of BFSI, beginning with the convener Rajesh Bhai, who has been working very, very hard, Vijay ji, Manoj ji, who are all strength of this BFSI study group. So thank you so much, and over to you, Rajesh ji.
So first of all, I request Chairman sir and Vice Chairman sir to felicitate our with the token of our. You also. Sir, for you this. Yeah. No, just. To the another speaker also. Upload.
Sir, you are joining. Come.
He's our member also, and
Vijay ji, come.
Come, Vijay ji, come.
Vijay, अरे मुल्ला जी.
Yes, senior most.
अरे उनको तो आना ही.
Yes. All our speakers.
Thank you so much.
I think both topic are interesting. Of course, we are having some meeting, but be it the risk management or this investment.
So we keep on PPD at our groups. So if anybody wants to use, or if ICI wants to, WRC wants to use, they can use. So we'll put that both the PPD in the group.
He is a future speaker, 20 years in banking.
Great.
Oh, okay.
So please carry on. That's why you can
Thank
come
you.
here.
Yeah. Thank
you so much.
Thank you.
Thank you, Chairman Sir and Vice Chairman.
Thanks.
Thank you very much.
Thank you.
So I request to introduce आवाज है?
Hi everyone.
Yes.
Welcoming Mr. Aditya sir here.
Thank you so much.
I'll do a quick introduction for him. He's a seasoned professional and certified financial risk manager with over 25 years of experience in risk management across India and multinational organizations, spanning banking, asset management, and risk consulting. Over the course of his career, he has held senior leadership positions, including servicing as Chief Risk Officer and Head Risk Management with leading Indian banks, where he was responsible for building and strengthening enterprise-wide risk frameworks. In addition, he brings significant experience in information technology solutions in the areas of risk and compliance, having worked on the design, implementation, and governance of technology platforms that enable robust risk oversight. This unique blend of domain expertise and technology orientation allows us to align business objectives with effective risk controls, enhance transparency, and ensure regulatory compliance. Welcome, sir.
Thank you so much. Thank you.
This welcome, it's all yours. So we will not waste more time.
Sure.
So thank you so much for having me here, and it's a great opportunity, and it's for the first time that I'm coming to this council, and in fact, this building itself is my first visit to this building. So thank you so much, Rajesh ji, for inviting me here and giving me an opportunity to interact with you all. So the topic, as we were discussing, what topic we was okay to talk about risk management, right? So it's a very important topic. We all hear about risk management in all walks of life. There is a risk, and when you especially coming to banking and BFS and NBFCs, risk management is very critical. So I know most of you are chatted here, and risk management. All of you have we all have no risk management. So I just try to touch upon in terms of what is so different, or how do we as a you will also look at the risk management in a certain way, but as a practicing risk manager, as a financial risk manager, holding the position of as a CRO or head risk management different institution, how I see it as a risk manager, what we do and how do we look at risk management, because everybody can have its own view over the risk management. So I just want to give. So I keep that my entire discussion very open. I kept my slides very simple, so that it can be kept as a since it's a discussion forum or a study forum, so we can just exchange our ideas. You can ask me question wherever you think you need to go down, because since I'm interacting with you for the first time, I didn't keep any fixed agenda. Okay, focusing on any specific area, because risk management is very wide. So I just kept various things. We can talk, you can pick up anything, we can talk, we can discuss in detail, or we think, okay, time is less, we can schedule some as per, if Rajesh will give me some more time.
Yes, it's all yours.
Yeah. So banks and NBFCs are, our financial intermediaries, taking funds and, taking from one and giving to another, right? So taking either in deposits from or the borrowings from and lendings. That's all we know. So when we do this transformation of funds from one entity to another, or in one shift from one product to another, there's always a financial intermediation. And when you do this, there's a risk, right? And so what we have seen is there have been, while we talk about, there are so many layers of governance, risk management is always there. You have control frameworks, you have audit frameworks, still things do happen, right? It's not that we're talking about risk management is there for quite some time. Audit has also been there. Still things are happening, right? So what is happening? We all know about ILFS case. We know what happened to Yes Bank, Lehman. It's not happening only in India, it's happening globally, right?
Globally.
It's all over, right? And it's not only large institutions, from smaller institutions, it can happen anywhere. So wherever you find, it has not been followed, or it's not been followed in spirit, right? There's when you follow something, but if it's only following letter, or not followed in spirit, there are chances of failure as well. So we know, in India also how the AQR started, right? Asset quality review somewhere in 2012, 15, right? When Mr. Raghuram Rajan started that thing, and we found that NP levels actually had gone up to around 8 lakh crores and all this thing. And all that. What was that? Because the asset quality, it was a credit risk, right? It was not credit risk or not properly underwritten, or if it's underwritten properly, it has not been monitored over the period. If it's monitored, if it's not counted properly. So there could be many things that can go. So we'll talk about all this thing in detail. I'm just touching about just to set the context. So, and there are instances, it's not that one risk is in isolation. There's always a chance that you'll find one risk leading to another. It happen, right? For example, let's talk about, we had seen a couple of years ago, the SVC thing happened, Silicon Valley Bank, the Silicon Valley Bank in Silicon, in US, where suddenly something happened, right? And there were a lot of noise. And in fact, some people thought it's SVC India, right? so what happened there? Suddenly it was a market risk. We can even discuss about what actually happened. Just to give you some kind of little bit flavor here.
That would be interesting.
Yeah. So actually, what they did. So we take money. All banks take money, right? So where do they park their funds? See, if you have excess fund, where do they park? Okay, they park in some government securities. Generally, either they use it lendable amount for lending. For lending amount is stuck, right? You can't withdraw money when you want it. So where do for liquidity purposes, where do they deposit this, or where do they place these funds? Generally, most of the banks will place in government securities. So when they government securities, we also do in India banks also we do government securities. What happens, if you invest in dollar? So what happened at that time? The Fed increased the deposit, increased the Fed rates. So market risk and interest rates or market prices and interest rates are inversely proportional, inversely related to each other. So when the interest rate went up, the prices came down. The prices came down, and suddenly they had to liquidate some of the thing because depositor wanting money. Didn't start with a big amount, but they wanted to. There were some outflows. They wanted money. They wanted to liquidate the security, but the value that it was fetching and how it was accounted, it was much lower. And the moment that it creates a ripple effect because when you're selling and you're selling it at such a price, market also gets known that you're selling it at such a low price. Then it creates and then problem was the depositor was very, very tech savvy. Everybody was internet, net banking enabled, all most of the fintechs who are the depositors. And then they can withdraw funds online and suddenly there was I think it was almost 45 billion dollars that suddenly went out from the system. And bank cannot because there was suddenly they had to ask for this. Suddenly the collapse happened. So it was actually market risk because they invested. And why these prices suddenly fall? Because the securities that they invested were very, very long term. And higher the duration of the papers, the price impact of any interest rate change will be much higher. We can get into these specifics also, why and all those things, but I'm just giving you the flavor of it. What happened in Cosmos? That's Indian bank, Cosmos Bank, Pune based. Again, something happened here. It's operational risk. Some 94 crores. So there was a cyber attack on this. Something happened. Despite all the security layers, you talk about RBI framework on the security, information security, everything going through, but still happened. There was man in the middle attack. Something happened, and bank lost 94 crores there. Yes Bank, we all know it happened. It happened with a large credit risk concentration, large underwriting risk, and later on, what happened because all this thing led to a moratorium. Moratorium led to a loss of confidence by the depositors, and then it all started. And then a lot of people lost money on the tier one bonds, which were 81 bonds. So I'm just saying the risk. There have been, despite risk management in place, there have been instances which have happened and which are still happening because there you'll find there have been some gaps, and risk management practices may or may not have been followed in spirit. Falling in letter and falling in spirit is very, very two different things actually. So what is the typical risk So you just break me, even if you wanted to discuss anything on the previous slide on any specific case, even if that list case is not listed, we can talk about anything. We can. It's because it's a session where we all want to learn. Like I also want to learn because more you will ask, more I will be able to think, and it helps me also learning. So typically, if you look at in a bank, and you will find all literature in textbook stuff and all, you will find these five risks typically. Credit risk, what is credit risk? So credit risk, we all know this, it's a risk of default because you all lend money, banks lend money, the money doesn't come on time. It's a credit risk. We all take credit risk also. We give money to our domestic help also, right? Our drivers also at time, but if the money doesn't come, it's a credit risk, we all know. Market risk, we all know equity markets, right? Equity markets, we all know. But how does but banks' main market risk comes from largely from the fixed income side because the exposure to equities are very, very limited. And NBFCs is very, very even larger for market risk, it comes largely either from interest rate instrument or from the forex. So these are the two main instruments that is there, which are because where the bank has exposure. First of all, for any risk to happen, there has to be exposure. For market instrument, these are two main instruments where the bank has significant exposure. And why do they have this exposure? Because to keep idle fund, to keep liquid funds, banks have, it's not that all the money that they get either in the form of deposits or borrowing, they deploy or they lend it or they use it for lending purpose. They have to keep certain money for liquidity purposes. And this liquidity is parked typically in the government securities or in the liquid government security, which are exposed to interest rate risk. So maybe if you're not anywhere, you can stop me. I'm just going at my pace. So they invest in government security, and then they invest in government security. Government securities have interest rate risk, and if interest rate goes up, the price goes down, and it can. And if the situation is such, they invest in very, very long term, and if the RBI increase the repo rates, yields go up, prices go down. We can any bank having significant exposure, and they have to sell these securities to pay the depositors, they can also have a similar situation as SVC had. Right? So that can also happen, right? So that's very important how the interest rate risk is managed by the bank, which is part of the market risk. Liquidity is very, very important. Very, very important because liquidity is catastrophic. Market risk you can still manage, you'll borrow funds, this, that. But liquidity, if there's no funds in the market, if nobody is ready to lend to you, knowing that your situation is bad, how will you pay depositors? If you're not able to pay depositors, then queue up outside the ATMs and you don't have money. Nobody is ready to lend you. What will you do? You will sell your stock. You want to sell your stock, but people know that you're in distress. Anyways, markets would be behaving in a different way because suddenly any player sees there is always some effect on the market. So all factors gets combined. You're not able to sell. If you sell, you'll be able to sell only at a discount. You're not able to borrow. Suddenly everything goes everything it's like a Murphy's law. When something goes wrong, everything goes wrong, right? Nothing will be in your favor. So then certainly and you'll not be able to leave. Then what will you do at times? Then many banks, whosoever has faced, has approached RBI in those cases as a lender of last resort to bail them out, right? So they will buy these securities, or they will say, okay, we'll repo these securities so and so rate, and that's how Indian banks have been bailed out in many of the cases, especially the liquid. Operational risk we talked about. Operation, we all know because of various there are so many processes, there are so many, anything can go to the processes, there are so many systems. Very important thing is, we have all seen COVID scenario, right? We never thought that we will be able to operate from home. So when this happened, how will we work? It's all about business continuity in terms of in case something happens, from where will we operate? How will we operate if the system is down? From which system will take over? If my main system is, I'm not able to assess the system, right? I'm sure you also must be facing it. If the file IT returns, then you ask for the extension, right? So what happened? And government also does all those disaster recovery plans, right? In case the system is not running, so all these things come as part of operational risk. Those IT does, but it's all because
It really depend on IT.
yeah, it's all depends on IT, but also but which all systems to be done because you can't do everything. You can't replicate, you can't create a disaster recovery for each and every system. So you need to understand what all are critical systems. Then only you will be able to, because there's a cost involved with everything. It's easy to say, okay, we all put a blame, okay, why it is not, the disaster recovery was there, why the backup is not there. But when you have to create a backup, you need to do is cost benefit analysis also. So not everything can be backed up.
Cyber security risk comes in operational risk.
Yes.
It's a major risk by itself now.
It's major risk. It's a major risk, even though you have, and now there are other risks also which are coming, which is also kind of you can say it's operational risk. There are a lot of model risks. Everything is dependent on models. What is the model governance around? What is the governance around this? Who's managing those models? So all the day, if you these days you will find those gets approved in 5 minutes, 2 minutes. You put in the day because there's an engine running behind it.
So that's a very
There's an engine running
high
behind
risk,
it.
no?
It checks all your CIBIL score, it checks your profile, it checks your, because you give access through your phone, some of the things, you give your permission, it checks your behavior, everything. And there are AI tools, right? So it gives you a score, CIBIL is anyway there, and you give the permission, okay, to access your CIBIL score, and then it gives you, but there is some engine.
People don't give permission for CIBIL score. Once they apply, they just access it.
No,
And
you
they
have
just
to-
inform you.
No, you have to give permission.
No, they just inform you that we have checked your CIBIL score.
You give consent.
Has been always there that you need the consent
Of
from
that.
the.
So you may be giving a consent in the form of some OTP for registration, but in that, when you're giving OTP, you would have been, there will be one of the conditions that you're giving your OTP for this purpose.
But CIBIL doesn't approach the customer.
Civilly, bank is taking the authority from you.
NBFC and all those.
NBFC
every
or-
time it comes.
NBFC or NBFC must be taking a authority approval from you or consent from
No,
you.
in fact, there are lots of things when there are calls, there are unsolicited calls.
Right.
In that case also, some cases there is something and they take CIBIL score, and we have seen people have complained because they are unauthorized calls.
So Manoj,
And then what happens in some agencies, then you say CIBIL score is called for twice or thrice, and a person is not getting a loan, but the point is that person doesn't want a loan. These are unauthorized calls, and then they check also, that has also happened. So in fact, you suggest what is the remedy for that? Whom to approach?
So I don't think these days CIBIL can give you the score unless you authorize.
No, I think the thing comes.
So
They-
unknowingly,
Your civil score, check your civil score. will come.
unknowingly you may have
But you
taken.
say, yes, I want to.
No,
check
in
my
fact, you
bank.
have not even applied for a credit card. Even then, this Bank Bazaar and all these agencies are there. Lot of unethical practices are there. You're not even applied and it is checked.
No, it is not checked because you must have applied something else. So they have the database of you
Huh.
where the CIBIL score is there. It's not updated CIBIL score. It is a score which is maybe dated 1 month, 2 months, 6 months. Basis that there, and there are a lot of database
Data though very good.
data available in the
Data
market which
though.
is sold along with the CIBIL score. The CIBIL score is not
Center,
the CIBIL score is not latest. It is a score maybe 6 months, 2 months, 3 months, whatever. And basis that screen, okay, and then it's a filter out based on criteria, all 800 and above. Okay, there's with a profession, this, with a geography, this, with this pin code, this. Right? So they will please, and they okay, this is the list of 1,000 customers in the area of say Kandivali. Right?
सबको भेज देगा 5 लाख आपको क्लाइंट किया है
सबको आपको मैसेज
ये हो जाता है 5
It's
लाख
not
आपको
that they
grant
have
किया है।
because see it affects your CIBIL score, it affects your your ability to get a loan because as a lender we also check why Mr. Manoj is frequently scrubbing his CIBIL.
But the point is here, so nobody is doing it. This unethical practices by this telecallers related people who get some commission.
So they're doing telecalling.
Hmm.
They're not scrubbing unless you authorize.
No, I can show to you
For loan
very
it is there.
clearly.
We'll take everything, let him.
मनोज जी ऐसा नहीं होता है मनोज जी वो एक्सप्लिसिट नहीं होता है इनडायरेक्ट वैसे वो परमिशन ले लेते बाकी आप बोलते हो वैसे
Particularly Bank Bazaar is one.
बाजार
I have spoken to the MD of
आपने क्या पता
SBI.
बैंक बाजार के आपने क्या
I'll tell you, I have spoken to the MD of SBI, also MD of SBI cards, and also we had talked about investigation, and how such things are. That's only listed company which is in credit cards, separately listed. So I had a conversation with her a few months back also,
And 1 year, in case of somebody, one other CA mentioned to me, he says you have excess, you take it up. CIBIL score actually over 100, not applied. Not applied, he has got 3-4 cards. So I took it up because because you mentioned about it. So I have a deep domain knowledge about it. I told you about the people also, they are also concerned. Then they investigate. So a lot of scams are happening, particularly online. And by this, even the TRA is concerned now to block such calls. There is no way it's a DND, but such calls are coming. And even the ombudsman of RBI, he is also wondering now what to do, because the remedy is to complain to ombudsman.
Yeah, ombudsman or to a TRA, or DND is not so effective while DND was there. But now the operators are actually giving some sort of indication nowadays. If you see the operator, you started against scam. It was not there, say 6 months ago, right?
Yeah.
Right now, yeah.
I block it.
One other risk which has gone into question is about the climate.
Yeah, so so that's climate risk is again coming, because it's coming both from. So why the climate risk is, one is because of calamities that we have seen, right? That's actually a physical risk. Because so climate risk is generally, if you read or just giving you, there are two things that normally, one is because of climate, other is because of transition. Why transition? Because you're moving from a one source form of, say for example, now we are all slowly moving towards EV. What happens to the engine which are ICE, internal combustion engines? So that is a technology change that is happening. And why it is happening? Because you're moving to the greener fuel. The greener fuel, all the industries which are linked to ICE, internal combustion engine, that will get impacted because of transition risk. And transition risk happening because of climate. So all the industries, auto component makers, and if you go to Pune, you'll find so many MSMEs who are making this, and suddenly they have to either upgrade, move to the similar auto component which are supporting the EV.
Hardly there are any components in EV.
And whatever. So they will actually get into the either into batteries or some other small component, or get into geographies which are still into this.
Yeah, absolutely.
Or they'll have to find clientele into those geographies. That is what is happening.
Correct.
So carry on about structures and all, we are very keen.
Yeah. So this is again your AI ML risk again. That's again because we all talk about AI ML. I don't know how it works. How much ever I know, I can only talk about few things, right? Whatever we know, whatever session we attend, so some classes we will attend. We are not into we are not expert in AI. But people who are expert in AI, and we are running engines all about this thing, credit sanctioning, everything is happening through AI. We don't know what can go wrong, right?
So the banks are securing their AI, so that they don't interact with the external world.
Yeah, but to secure AI, they are also using another AI. Yeah. So there are behavioral sciences, the historic sciences that they're using, and it's becoming a complete technical sphere these days,
And one more
especially in the retail side.
Now geopolitical risk is again.
Yeah. Now you talk about this tariff, suddenly tariff happened, right? And
liberalization.
Yeah, in
The tariff today, that visa is a big issue. The $1 lakh visa fees, that's a big issue in today's.
Per year.
Per year, per employee. Per year, per employee.
And the cost of employee is not even that.
Yeah, cost of employee is only $75,000 or $80,000 or $60,000.
So we'll
I think, sorry, yeah.
I will focus on the subject.
There
are lots of
call them specifically.
lots of slides, yes. Yeah.
Typically, the structure
Yes.
in a bank, you will find like this. You will have a chief risk officer who will be reporting to MD, and I'll have a dotted line of reporting to the board through the risk management committee. Actually, I missed out that. So chief risk officer directly reports into risk management committee of the bank, and the risk management committee reports into the board. And typically, if you find in most of the banks, you will find at least these 4-5 items, right? 5 sub verticals. One will be credit risk, other will be market risk and ALM, Third, the operational risk, information security, and model value. So these are typically you'll find most of the banks as per the requirement of RBI. They could be further split. Credit risk could be split into retail and wholesale. I'm talking about the risk department, not the underwriting piece here. Only the risk department who comes, who's not underwriting the risk and only managing the risk actually. Market risk, ALM could be separate in different functions. Operational risk can also be into multiple layers, can be split. Information security, model value chain. There can be few more risks.
The government policy risk could be split with the legal officer.
I will talk about
Common policy risk.
Compliance and legal.
Compliance and legal.
That is the legal.
Yeah.
So here in listed companies, as per LODR, the RMC, which has a risk management committee, it includes a lot of experts with high degree of domain knowledge.
You talk about BFSI only, or you talk about?
No, I'm talking about listed companies structure.
Right.
As per LODR, we need to have risk management committee with specialized knowledge.
Right.
So that has high accountability
Correct.
for listed companies.
Right.
And this is a structure applicable to all,
Yes.
listed, unlisted, generally.
Yeah.
So for LODR, RMC, people on the board, they are really experts
Even for the bank.
and they are selected
Even for
in
all
banks and BFCs.
all regulated entities of RBI, whether listed or not, has to have a risk management committee.
Yes.
Under regulation of RBI.
So LODR is only for for
Yes.
that's for the companies
Yes.
overall. But for regulated entities, NBFCs or small finance
Cooperative
banks,
bank. also
all have to have a risk management committee.
Oh,
That's
So
the
they have
mandate.
high degree of accountability.
They have a high degree and they have to have the skilled people who understand risk, have to have a right kind of qualification and experience, and the board members should be.
And they meet often and they get good amount of remuneration also.
So
अरे वो यार अभी मनोज
I'm talking about.
you continue.
So minimum requirement for the banks and the risk management committee should meet at least once in a quarter.
Agency start कर दो.
Extra information.
No,
I think I
immediate
think I have to
talk
move
now.
a little faster.
Yeah, you.
Yeah.
Actually, this RMC, the members are external members or they are?
No, it's the board. It's the board. It's RMC of the board.
Okay, so.
So four members, 4-5 members of the board, depending on the size of the bank and all. These members would be part of the board. Members would be part of the RMC.
So they may be independent director also.
So yeah. So generally, our board operates through various committees, subcommittees. So RMC, audit committee of the board. You have IT strategy committee. You have finance committee. You have
HR.
CNRC we call it, nomination and remuneration committee. So they are CSR committee. So there are a lot of such committees.
Now that there is ESG committee also that has been now included for the large corporate.
So something about model. What is that US like? Model when
So these days there are a lot of models that are used by the banks. So for credit decisioning, there are models. For market risk, you do valuations because they're structured products. You have to do valuation, the derivatives and all those things. Who has to validate whether you are doing it right? There has an independent part function. So you create models here, but it has to be validated by a separate team.
Very highly technocrats.
Yeah, these are highly statistical domain or data science people. Right. So credit risk, we all understand. For to manage, look at the credit risk. I'm not getting into detail. I would like to make you just get into this. It looks at the entire balance sheet of the bank in terms of how the assets and liability mix are, what kind of liquidity risk are there, interest rate risk. That is and it gets a complete view of the entire balance sheet because they also look at the credit risk where it is, because credit risk can lead to liquidity and all those things. So it's very, very important committee in a bank, asset liability management committee. Market risk management, very, very focused domain only on the investment part. So it is very big, but ALM is a very, very big company, looks at the entire balance sheet. Information security, self-explanatory, operational risk, we talked about that. This is some of the framework that have evolved over a period. We have it was Basel 1, Basel 2, Basel, we are all on Basel 3 now. We have standard, we have also have, just want to give you some flavor about Basel 3, what it does, right? It looks at mainly over the capital adequacy. While there are a few other things also, the important piece of the Basel 3 is the capital adequacy. So whether you have sufficient capital for the risk that you're taking. Okay. Now, how will you know what are the risks that you're taking? So I said there could be, for one bank to another, the risk could be different, right? So they have created a one common factor that, okay, there has to be minimum capital should be there, at least for covering these three main risks. Rest we will see later, that you can decide on your own. But for three risks, credit, market, and operational risk, they have given a framework. You assess the capital based on these three framework, and compute the capital, and actual capital should be more than this. So these three, so it's a minimum capital requirement. It's called minimum capital requirement. At times people get confused. What is the, So these are the three main risks, because otherwise it's difficult to compare one bank to another. So they said, okay, for these three risks, I'm giving you a standard framework. Compute the capital for this, and your capital should be much more than this. So that is one pillar. But there are other risks also in a bank. I may be doing some different kind of structures. I may be only doing in one particular industry. I'm only lending to real estate. I may be only doing infra projects. So my risk could be different than a bank. I may be only into a very, very unsecured products as compared to a bank which is fully secured. So risk could be different. I may be running, I don't have a deposits. I have a very, very small short-term deposit. I am creating a lot of mismatches and creating long-term. So there will be a lot of risk could be specific. I may be certainly largely of the model-driven bank, completely digital. So then you say, okay, you have to assess your own risk also, other risk. Barring these three risks, you also assess these risks. And then keep a capital again.
But no recommended capital per se.
No minimum capital, but you should have a capital.
So there is a complete formula regarding.
No, there is no formula. You assess yourself.
Oh, okay.
Board should approve it.
At your discretion.
And you should keep this capital, so that during RBI, when they come for supervision, they say, okay, how have you assessed rest of the risk? And say if your minimum requirement, say 11.5%, and all these other risks require another 4%, whether you have 11.5%, 15.5%. So that is why you will find the bank of the, you will always have a capital bank's capital of all above 15%, because you have to cover for these risks also. And it also says, what if something goes wrong? You're talking about normal scenario. Something happens tomorrow. Have you stressed your portfolio? What if your non-performing assets goes up suddenly? Do you have capital for this, provide for those losses? So do those stress testing also, then also ensure that your capital is sufficient. So I don't want you to run around at that time, okay, say my capital, I'm short of capital. So those are the framework that had come as part of ICAP. That's also part of Basel III only. Stress testing we do. There's another thing that has come up, early warning system. Very, very important thing that has come up. We say, okay, you have been lending, suddenly you find, oh, the loan has gone bad. Then sir, क्या कर रहे थे? Loan दिया, अभी तक आज तुमको loan खराब हो गया, but what is your system to ensure after you lend? Okay, at the time of lending, you've done all due diligence, everything, all done, but suddenly you one fine day, okay, it's gone bad. So how have you been monitoring? So what are the system? Are you tracking? So there are a lot of information that is available in public domain about you. You can make out from the share price movement. You can look at the bond spreads. You can look at your own from his statutory returns, whether he's filing GST on time, whether the EPFO is filed on time, right? And how was the number of people attrition in his own organization, any key KMP resigning from that organization. So there are a lot of information in terms of from a financial statement itself, whether the credit period is increasing, decreasing, and all those things. You can make out whether projects are completing on time, whatever activity. So a lot of information nowadays are available in digital form. Are you consuming all that information and able to decide something? Okay, there is something wrong. Stock price is going down. KMP resigned. And there is some income tax rate also happened on this particular. So you can collect all this data and create some sort of science around it and create some sort of early warning system. Okay, there's something wrong, so that you can go and check before something really go.
So even though SMA1 goes on, SMA1, even though before that you do what?
Yes, SMA may not have, he may be paying to you because you're important to him, because he may not be paying somewhere else.
But bank allocates that much of manpower.
Yeah, so it is mandatory to have a system now.
The system is one thing, and allocating manpower and
you have to allocate manpower.
Monitoring that.
Yes. Monitoring that. So now to that bank is not allowed SMA1 also. SMA1 itself is an alarming situation. So if someone goes on SMA1 for one or
especially for corporate loans where the information is available, right? And especially where you're giving the working capital facilities, you have a complete in terms of, and you have to screen where is it, where all the payments are going, and the payments are going to unrelated parties. Why? All those things, because something goes bad, then the RBI banks the supervisor questions you. What were you monitoring mechanism? You are a banker to this corporate, and you were not monitoring this. See, he's making payment to his own subsidiaries. So what purpose?
This is a continuous process.
It's a continuous process, and every day you will find a lot of alerts are coming. It could be false alerts also, because you're putting some rules, some algorithm you're writing, and then you have to ask also the relationship managers. All those things will go and figure it out what is happening, why. If something is happening, a raid has happened, why raid has happened, or if the GST non-compliance is there, why. It could be technical issues, or it could be genuine issues, actually issues which should be concerned to you. Because there could be facilities coming for renewal. You'll have to take a call whether you want to renew that facility or not. Or you have to cut down the facility, or you have to ask, okay, give me all these compliances should be done by so and so date before, we are giving this sanction on subject to these compliances. You want to put a pressure, and you want to share some of this information with tomorrow some of the banks want to take over, then you probably may pass on this information as well. It's very important that early work, and there are a lot of effort by the bank, by RBI on this early warning system, and it's very critical area actually, which is evolving. And because since a lot of information is there in the public domain, they want to use this information, and this area is fast evolving. Expected credit loss is again a kind of something risk management guys used to do it. Now that started. Risk management actually becoming more standardized, but the provision now, accounting provision are more become a risk driven, because earlier it is like incurred losses. You incur loss and you make a provision. Now you expect what can go wrong,
and you make the provision.
Thanks to ILFS, this thing came, a wake up call in NBFC.
Mainly coming from IFRS and IFRS.
No, that is, but implementation of NBFC was done. Because of this, for banks, it is still not mandatory.
Yeah, but it came in 2000. Yeah. So if you want to get into this, I can, so this is very important.
They wanted to, RBI wanted to strengthen the NBFCs, so they made it applicable to
a lot of models
ECL.
You're asking about models, no? So when you do expected credit loss, when you're making something about expectation, you have to create some sort of model to predict those things. And when the models are there, it always happens. So there's a model risk.
So what is the responsibility of the RMC or the CHRO vis-a-vis the ECL models? And now who is the main thing, who plays a main role in selecting the model? Because different NBFCs, different models. And they have worked at some period of time, they don't work in some period of time. We have a history of annual reports and quarterly disclosures, we see that. Now, who plays the role in deciding the model? Is it the board? Is it the risk management committee? Is it the CHRO or?
CHRO is no role.
Because RBI says you should have a model, and model should be robust.
Correct.
Now, robustness or a model, who is ultimately there are 3-4 alternate scenarios when you select the model. So if you can share some insights on that process.
So ultimately, the responsibility stays. But obviously, board will not do anything. Board will look at the RMC. RMC also can look at it, right, in terms of whether it is robust or not, ask questions.
Audit committee also.
Audit committee also. So, and they will also they are not executive bodies, right? So they will look at the department who's doing it. And since this is risk models, okay, because you are assessing, predicting risk, especially I'm talking about this expected credit, I'm only talking about this. The risk team typically develops the models to predict what could be the losses.
Okay, the risk team develops. It's very vital.
Yeah, risk team develops models for expected credit loss.
Yes.
And then they develop, they could be risk again, whether models are correctly developed on model validation team, which will validate. It get externally validated also. And when they get comfort, okay, we have developed, this team has also independently validated, external people also validated, because it has a lot of impact on the provisions, right? It is impact on there are some models which may not have, it's only for the academic purposes. This has implication on the provisioning, right? Provisioning. And the capital.
All financials,
right? So it is very important.
And all the ratios, ROAs, RO, NIMs.
It is important that it goes through all the proper, and then basis all those things, okay, this has been done, model validation has been done, external validation has been done. Then it goes to RMC. RMC will also look for all those things, whether you've done all those things. They will be experts also in the based on
Joint auditor's responsibility is to also to review. Yeah.
Since we said RMC should have a qualified people experience, so they based on their experience, past experience, what has gone wrong, they will ask certain questions. They will say, okay, this you have not done. What have you done this? I found this. Are you satisfied with all those things? They based on their own wisdom, they will ask questions, right? And they will also draw comfort based on follow the process, and they will approve it and they'll recommend it to the board. Board may also some of the people from RMC will also be part of the board. But some of the members who are not part of RMC, they may also can ask questions, and they ultimately gets approved. Or they may say, okay, now come back with this, give me this analysis, and then come. That's how it's a continuously improvement, evolving exercise to refine it further. Somebody will give some inputs and refine and say, okay, do this also.
AI has done good a lot. And AI
Yeah.
has helped a lot in model development.
But should not become a black box.
Yeah, that's true.
Yeah.
That's
Now we all do something in chatbot or chat GPT. We write something, it gives you something. Sometimes it makes sense, sometimes it doesn't make sense, right?
they have a human element going before you
Yes,
communicate.
correct. And it also says at the bottom, right?
Yeah, it says.
At the bottom.
Can I refine? Can I do something?
Certain experience which I had in my life, chat GPT doesn't know about.
Yeah.
That's a good thing.
Yeah.
It doesn't know what.
Then the human factor come into picture, right?
So far, it will know so.
Yeah.
It is
So far, but it will know so.
Yeah. It's too small, is it? Yeah.
No, that's fine.
That's fine.
Yeah,
That's
yeah.
good. Yeah.
Okay. So I'm just yeah.
ECL argument for the banks. So what do you feel? Why they are not building it? Is it only provision?
No, it is entire India. It's not about only ECL. It's about moving to the new accounting standard, and they want to look at the impact on the balance sheet of all the banks, especially PSUs.
So it is PSU readiness for ECL.
It's about one is readiness, and second is about the impact. See, ultimately, if there's a capital impact, who will have to put the capital? Government only has to put it, and the government is not ready.
No, stakeholders. Government is only depends on the percentage they have.
No, because most of the banks are at 51%. No.
But 49 is also important.
So no, if somebody else put their stake will come down, they will lose the majority holding.
Impact would be on SBI.
There's so many other.
SBI is strong bank. They are ready. They are confirmed.
They're looking at all those things.
We had a CFO of with in our round table, and also they are confirmed.
Yeah. Can I continue?
You can.
Yeah. It's getting very exciting.
So no, not only this, when you talk about, see, for any auditor or for an RBI, for any supervisor, if it's a standard formula, okay, इसके लिए 10% लगा दो, इसके लिए 20% रख दो, provision कर दो, इसके लिए 20. I think it's easy like, no? But you say इसको एक मॉडल बनाओ. अभी जो ऑडिट करने आएगा और सुपरविजन आरबीआई से करने आएगा, उसको भी समझ होना चाहिए ना. वो कैसे समझ करेगा कि इसने मॉडल ठीक बनाया कि नहीं बनाया? उसके लिए भी तो प्रॉब्लम है. कल उसको भी सर्टिफाई करना है कि ठीक है कि नहीं, इसने प्रोविजन कम किया कि ज्यादा नहीं किया. या तो फ्लोर रख देगा वो कि जो ओके, जो मैं आईरैक नॉर्म्स में करता था, वो वाला फ्लोर तो मिनिमम वो उतना तो लगेगा. अगर तुमने इससे कम करा है तो नहीं, ज्यादा हुआ तो लगाना है तुमको, कम करना है तो नहीं. पर जब ये सिचुएशन आ जाती है तो गेमिंग शुरू हो जाती है. बैंक्स विल आल्सो ट्राई, यार इससे अच्छा तो कुछ करो, मॉडल ऐसे बनाओ कि उससे प्रोविजन ज्यादा बढ़ेगा. So when you don't have an incentive, only one-sided impact, then all the thing impurities come.
That is the reason it is always validated
No.
by external agencies.
अब बेनिफिट तो है नहीं, तो बेनिफिट नहीं है तो मैं यार there will be lot of pressure. मेरे उस बैंक का तो हुआ नहीं, इतना प्रोविजन बढ़ा नहीं, तुमने ऐसा कैसे मॉडल बनाया? हाँ, तो तुम्हारे प्रोविजन डबल हो गए.
और वो स्टेक होल्डर्स को जवाब देना है बाबू.
हाँ, मैं तो कह रहा हूँ.
Mr. Anush, even the compulsory that it has to be validated by external agencies. more actually neutral people.
Generally
they have to
preferred.
talk about provision and the impact on the profit and loss.
Generally, that's it.
From bank side, bank will always.
Have vested interest.
Huh.
Bank will not.
No, even the external agency can have vested interest. It's a skill level of competency of people in the bank. But it's a temporary job.
अब कुछ ना तो करवाएंगे ना सर.
नहीं तो करना कहीं से तो वैलिडेट करना पड़ेगा.
Oh, okay.
कहीं से तो वैलिडेट करना पड़ेगा.
Go big four or go to this. Regulator doesn't say.
Okay.
You have to have level of competency or it's a temporary assignment. You go to whoever you're comfortable, but responsibility remains with the board. And
Let me go little bit more on the credit risk because it's important for a bank. Maybe we can skip some of the market risk and other because
No,
very
that's okay.
yeah. Because
forex risk we wanted to cover. It's very vital, and you have deep down on.
Keep 5 minutes, last 5 minutes. When you finish after 10 minutes, then come last round of question answer. So our intention is like
Okay.
that some of them.
so typically in a bank you will have a governance structure with committees and all that. You will have policies. You will have multiple policies. To talk about this. Then you have monitoring framework. You will say bank do ratings internally. You have external ratings. You must have seen all external ratings. Bank also have to do internal ratings also. Because you can't rely on the external. Because rating agency may or may not have all the data. You have you underwriting the account. You have a lot of information. So you must do internal rating. At times you find our internal rating are very bad as compared to because we know what can be very good also because we know okay this is what he has done. The information that rating agency has is dated information. There has been turnaround story and probably be better rating. So you have to do internal rating. So and you have various frameworks. Maybe you can, if you have anything, you can pick up anything and ask me. I can happy to answer.
Banks में evergreen होता था many years back. What is the scene now? मैं तो मेरे सामने देखा था आज के
हाँ.
फोन करते हैं कहीं ये दूसरे अकाउंट में से पैसे दे दो.
Now it is checked. पैसा कहाँ जा रहा है? That's why I said no. Account monitoring that EWS. Where the money is going in the here also. Early warning system. It's very critical. कि पैसा जा कहाँ रहा है? उसका end use monitoring is become very critical.
They have introduced some rules on that.
No, it was there earlier. It was not stringently followed. So now lot of focus on end use monitoring. पैसा दिया है तो किसको दिया है? पैसा उसके अकाउंट में था कहाँ जा रहा है? ये तो उसका बायर ये तो उसका सप्लायर और है ही नहीं तो उसको कहाँ जाना ना बायर सप्लायर हाँ you have to go because
All banks.
yeah because if something goes wrong then RBI will question if your credit monitoring was not good.
And RBI का audit has become very strict on that part.
Yeah. Special focus on EWS.
Inspection.
By transaction.
Yeah. Now to very strict about related party transactions.
Security has to give separate solution.
EWS के ऊपर तो थोड़ा strict हो गया because if this is good no it can actually take care of a lot of issues.
Early warning signal.
Yeah. So typically, so banks is a risk appetite framework. I'm not getting into this. It actually is a very important document for any bank. So that is how it starts, how much risk you can take, and then you allocate limits to various kind of businesses. Your potential RBI also has given a lot of limit structure and all those things. Concentration is very important. See, bank can be different. One bank who's largely into project finance as compared to a completely retail, as compared to a bank which is highly diversified. It's a very different kind of risk. Let's take in Basel, in capital adequacy also, it's very important actually. When you look at capital adequacy, you keep capital for the credit risk, right? But if I'm investing in, say, for simplicity, I am investing all in, say, AAA papers. All AAA, lending to all AAA borrowers. So capital adequacy will be the same for all banks. Requirement would be same because ये भी AAA को दे रहा है, ये भी AAA को दे रहा है. Suppose AAA का rating 20% risk weight लगता है, उसके हिसाब से एक standard formula है. सबकी capital adequacy same आएगी. But हो सकता है ये जो 10 borrower को दे रहा है और ये 10 borrower को दे रहा है, वो अलग-अलग इंडस्ट्री में दे रहा है और ये पूरा रियल एस्टेट में देता है. ये AAA बट सारा एक ही को देता है या फिर सारा ऑटो इंडस्ट्री को देता है. तो कंसंट्रेशन हो गया ना. पिलर 3 आपके पिलर कैपिटल एडिक्वेसी से तो नहीं पकड़ेगा. पर ये आपको कैप्चर करना पड़ेगा आई कैप के अंदर, पिलर 2 के अंदर कि आपने ये रिस्क है. ये कंसंट्रेशन के लिए आप यू हैव अ फ्रेमवर्क. किसको कितना दे सकते हैं, ऐसा तो नहीं है कि एक ही सिंगल बॉरोवर को बहुत ज्यादा दे दिया. तो those are the things that has come in large exposure framework. Again, very critical. How you design it, how granular you design it, and at the same time you also don't want to lose business because there are some good customers you don't want to. So that's very important framework for a bank perspective. Then you set limits. We talked about we take security. We all know there are certain covenants we take, and that's about it. Okay. Counterparty credit risk largely comes from not from the typical lending portfolio. It comes from the derivative portfolio. Okay. Why we call counterparty? Counterparty credit risk. So when you lend, that's a counterparty because I am lending, the risk exposure is on. But when it is a derivative works both ways. Okay, today I could be in the money. That means I have a receivable from the counterparty, right? And this is like, but if the rate changes, if the market factors move, I could be out of the money. He could be in the money. That means I have a payable to him. I become the counterparty to him. So the credit moves as per the situation. So credit counterparties, those are very critical in derivatives. Okay, so there's a counterparty credit risk. You have to keep capital for this also. A lot of banks have come with a arrangement called CSA, where since the collateral can move, the credit risk can move between you and me. And how do you mitigate credit risk typically? One of the way of mitigating take collateral. Okay. Now the credit can move both ways. So now a CSA where both keeps collateral. Both keeps collateral, and based on the movement, you dip into the collateral. I'm not getting too detailed. I'm just giving you some sort of flavor to it.
But that bank has a derivative portfolio.
Bank has a derivative. Most of the banks have it. Small finance bank, NBFC may not have.
Okay.
This is the all these are not to exchange. They have to position to counterparty. You can do to exchange also.
Exchange also, yeah. But exchange was very limited. You have only FX transaction. FX for you will not. So if you typically do a structure or little bit, so you will find only OTCs. You find largely OTC transactions.
Foreign banks will be very active.
Foreign banks will be active and they provide you back-to-back arrangement. Because if I am doing it for the customer, I typically typically cover it with the foreign bank.
Some hedging, though, of course, is required.
But that has also gone wrong, no? Many banks.
Sometimes
it has gone wrong because I have taken the price. I don't understand. See, assuming you don't understand. You said मैं तो एक broker की तरह काम करता हूँ. Customer को चाहिए. Customer को दिया. अब मुझे ना मुझे price करना आता है. कुछ करना Stancy से ले लेता हूँ चलो. हाँ, Stancy ने दिया मुझे. उसने कुछ price करके दे दिया. मैंने customer उसमें थोड़ा सा अपना margin add करके customer को दे दिया. मुझे तो समझ में नहीं आया. मुझे तो अपना margin में इंटरेस्ट था. तो मार्जिन मिल जाएगा, कुछ भी होगा, मुझे मार्जिन में ठीक है. ज्यादा कल कुछ गड़बड़ हो गया, कस्टमर ने बोल दिया तो मुझे तो ये प्रोडक्ट सूट ही नहीं करता था, मुझे कैसे क्यों दे दिया. ना मुझे पता है कैसे किया है, अब मैं उसके ऊपर डिपेंडेंट हूँ. Then it's a problem for the bank. You need to understand the product first. How did you price it? You can't say I priced it because he said so. Stancy ने मुझे प्राइस दे दिया था. मुझे पता कि मैंने उसको प्राइस कैसे किया, मेरे पास मॉडल वैलिडेशन था क्या, मेरे पास प्राइसिंग टूल था क्या. How do I assess कि कस्टमर के लिए सूटेबल प्रोडक्ट है कि नहीं, or whether customer understand this product or also not. That also is my responsibility. I have to ensure that customer has has understanding of risk.
There is no mis-selling.
There is no mis-selling. I have to
information.
So as per the process, you have to do a customer suitability and appropriateness test.
बैंक साइन ले लेता है सर.
नहीं उसके साथ कंपनी है तो उसके मुझे उसका रेजोल्यूशन लेना है, बोर्ड का रेजोल्यूशन वो सब लेना तो है ना. जो भी that's what I said. It may be in form, but if it's done only in form and not done in spirit, then the chances are.
But sir, majority time तो ऐसे ही होता होगा सर.
काफी टाइम होता है. I'm just saying.
कोई भी बड़ा बैंक हो इतना पर अकाउंट कहाँ इतना मॉनिटर कर पाएगा.
डेरिवेटिव सबको नहीं मिलता ना सर. डेरिवेटिव
But अभी तो
अभी तो
forex
stuck हुआ।
सब में आ गया सर।
फॉरेक्स इतना डेरिवेटिव नहीं है। नो आई एम जस्ट सेइंग फॉरवर्ड्स वगैरह भी दे रहा हूं,
हाँ।
एफएक्स में इतना नहीं है, एफएक्स की बात नहीं है, एफएक्स में काउंटर पार्टी रिस्क है। फॉरवर्ड जब जैसे भी डेरिवेटिव से चले जाता काउंटर पार्टी, एफएक्स तो ठीक है। अगर बाय सेल का कैश टर्म स्पॉट हो गया, आपने कल आज खरीदा कल, यू नो उसमें प्रॉब्लम।
डिपॉजिट ना रिस्क नहीं, थोड़ा डेरिवेटिव यूज करते हैं।
एफएक्स डिपॉजिट कोई डेरिवेटिव नहीं।
राजू भाई आप दे कट ऑफ दे देना।
हां
5 मिनट
हाँ हाँ नहीं तो
एफसी ने डिपॉजिट में
is also there.
Because he's available, we'll
Yeah.
share his number also
Yeah,
in the
yeah.
group and
I can
he's
come anytime.
anytime available.
I
No,
am-
not coming. Yes, sir. आपको personally थोड़ा time भी देना पड़ेगा when they want to meet you.
Yeah, sure.
So any last 2-3 slides that you have in
Yeah. So we just want to cover FCNR since you talked about it. वो जो पूछा वो
FCNR growth sometimes you're doing FCNR deposits.
So FCNR
Yes.
deposits, so I can take rupee deposit. I can take a foreign currency deposit also. मैं वो foreign currency deposit. अभी उसमें रिस्क क्या है? उसमें तो डिपॉजिट दिया ठीक है।
Conversion, no, mark to market. Very important.
तो समझना है क्या किया क्यों?
RBI requires mark to market of everything.
कुछ नहीं है सर।
पानी लेके आना।
FCNR डिपॉजिट लिया, आपकी बैलेंस शीट में है, आपके नॉस्ट्रो में बैलेंस पड़ा हुआ है, आप लेंड कर दो, डॉलर्स में गया, डॉलर में लेंड कर दो, क्या प्रॉब्लम है? प्रॉब्लम आता है, मैं तो डॉलर में लेंड नहीं कर सकता ना, मेरे पास है ही नहीं बैलेंस शीट डॉलर की। हाँ?
मेरा भी दो।
No, no, I can also have overseas operations also. मेरे पास overseas operation नहीं है, और या फिर overseas operation बहुत छोटे हैं, छोटा सा है पर मेरे पास डिपॉजिट तो बहुत बड़ा है, अभी मैं क्या करूँ? तो मैं उसको INR में कन्वर्ट करूंगा, रुपी में कन्वर्ट करूंगा, रुपी में कन्वर्ट करूंगा तो पर रुपी में कन्वर्ट करूंगा तो करेंसी रिस्क आ गया। अब करेंसी रिस्क करने के लिए मुझे तो उसको 3 साल बाद वापस करना है, तो मैं सोचूंगा इसको रिस्क कैसे, एक्सचेंज रिस्क को कैसे करूं, तो मैं फॉरवर्ड कुछ करूं, कुछ फॉरवर्ड वगैरह बुक करूंगा,
फॉरवर्ड तो करना ही पड़ेगा।
तो आ गया ना डेरिवेटिव्स, ठीक है। अभी एक और सिस्टम, अभी अब ये तो हम कस्टमर ने ये तो सिंपल हो गया, बैंक के साथ कस्टमर को फॉरेन करेंसी में मिला, फॉरेन करेंसी में उसको पेमेंट। अभी हम कस्टमर ही चाहता है कि नहीं मैं तो रुपी में लेना चाहता हूँ ऑन मैच्योरिटी,
कन्वर्जन ऑन मैच्योरिटी,
या तो आप उसको फॉरवर्ड भी भेज दो। ओके, आप बोलो कि ये होगा, ये फॉरवर्ड है, ये इस पे रेट है, तो देखो ये रेट है, इसको फॉरवर्ड के साथ मिलोगे तो देखो ये रुपये आपके रुपी डिपॉजिट में तो रुपी अगर जाते एनआरसी FCNR है ना, उनका तो इंडिया में है, तो बोलेंगे रुपी डिपॉजिट दोगे तो आपको 6% मिलेगा, इस पे आपको FCNR का 3-4% प्लस फॉरवर्ड का इतना, तो फॉरेन का उसका तो आपको 8% मिलेगा। प्रोडक्ट बन गया ना एक।
सही बात है
क्या? तो प्रोडक्ट तो हम लोग इनोवेट तो बैंक ही करता है ना, उसके सेल्स वाले करते हैं, प्रोडक्ट टीम वाले करते हैं, क्योंकि सबको डिपॉजिट चाहिए, किस ढंग से आ जाए, कौन सी करेंसी में डिपॉजिट आए जिसमें ये मिलके कुछ ज्यादा बेनिफिट हो जाए, कस्टमर को भी बेनिफिट हो जाए और मुझे भी डिपॉजिट मिल जाए। Okay, so there are many ways of using FCNR deposit. Right? Yeah. So I don't know which one. I just talk about this particular thing.
Yeah. Actually, ALM was also important.
This is important for, since you're largely into the accounting domain, so
There are many from ALM.
yeah.
Here.
So one is ECL under 109. We talk about ECL, expected credit loss, and we're developing credit models. Now the entire provisioning in NBFC is already started. So I don't know how the people who go for auditing as a statutory auditor or as an internal auditor or as a validator, how do they draw comfort? It's very for me, because you will see something and it is not a straight jacketed of formula के इसको ऐसे करो तो हो जाएगा. You can use anything, right? A bank will have its own justification, and that means you have to use your own judgment to even sign off anything, right? It's बराबर किया है. It's very for me, if it's something, it becomes very and based on this you are drawing financials also.
True.
Yeah. So कैसे how what gives you confidence कि हाँ कि certify कर दो? Fair valuation. So now every fair valuation we all do. For risk management, it has always been there. You always do fair valuation. For us, risk management, everything is mark to market. आज equity खरीदा है, आज शाम को उसको देख लेंगे क्या भाव था. चाहे उसका दो दिन सेटलमेंट बाद में भी होगा, पर मैं तो आज से देखना चालू कर दूंगा उसका कि मेरा कितना है. बट अकाउंटिंग में सेटलमेंट डेट के बाद शुरू होगा, क्योंकि बुक्स में दो दिन के बाद सेटलमेंट में आएगा. बट मैं तो आज की तारीख में, मेरे लिए तो आज से ही वो मेरा मीटर चालू हो गया है. Right, risk management start the moment I enter into deal from the trade date itself.
Correct.
Right, and it is always with fair value. No amortization, no other this. So for me it is straight away. But now your accounting is also moving towards that. Right. So risk-based audit. Now entire audit framework from RBI is saying you should do risk-based. Like standardized, you identify where the risks are and then do the merge. ALM disclosures, ICAP stress testing is all where things are converging actually between the risk management and the accounting. And I'm saying this is some of the things which I thought of. I was just making this presentation this afternoon, so I just thought of some of the areas. Audit of NPAs, very critical provisioning, complex products such as derivatives, securitization is another area, right? Treasury, risk disclosure, modeling of risk. So, okay, banks, typically there are 3 lines of defense. We call it the philosophy of risk management in a bank. Your businesses, the operations, who are actually doing, right, all are part of first line of defense. In the sense, when they do some activity, they are supposed to manage risk. Because you're doing some business, right? As a business owner, if I'm doing business, I should know what, I can't be saying, okay, I'm doing, तुम risk तुम संभालो, मैं तो अपना business चलाऊंगा, right? It's not that way, right? It's not the driver who's on the driving seat should be. It's not that somebody every time कोई उसको city में जाएगा कि रुक जाओ, ऐसा नहीं ना. He has to manage. But there could be other things where you say, okay, assistant dashboard दे दिया सामने, क्यों दिया हमने dashboard गाड़ी में? To assist him. That's a risk management because he knows कितना, but उसको पता नहीं चल रहा स्पीड कितना.
कितना स्पीड
है, इसलिए मैंने वो टूल दिया उसको. That's a risk management tool so as a risk manager, the second line is risk and compliance, who provides tools to assist them so that they can do risk management much better. Okay. Third line of defense, typically in a banking scenario, is considered audit. Audit. This is how all other functions, risk and compliance, second line, audit, third line, all other the first line, because they are doing business and operations, right?
Sir, in risk and governance, you are dealt with so many committees and the boards, NBFCs and banks. What are your expectations, particularly from CAs on the boards of NBFCs and banks? If you can tell us, that will help everybody. Got it? Your expectations from CAs, chartered accountants, on the boards of NBFCs and banks. What, as a risk management specialist, would you expect from them to contribute to regulations and risk governance?
So it depends on the area, first of all, in which area you the chartered accountants, because there are a lot of chartered accountants in my area.
Who are on the board of NBFCs and
the board
banks? Yes.
On the board.
Because that's a very responsibility, it's aspiration of every CA to be on the board of directors.
Okay. And
there are thousands on NBFCs. Many CAs have promoted the NBFCs jointly. Small become bigs. Ultimately, they convert into would like to convert into banks, and RBI is encouraging also conversion. So India becomes on the top 3 in the world.
Everything becomes your responsibility
Yes,
if you're on the board.
yes.
Right from financial integrity, from the governance, from the risk management, for the security, everything becomes part of. You can't say that I'm only in this committee. I'm only in the risk management committee. I will only look at the risk management, right? Your specific role could be with risk management as part of that committee. But when you're at the board, you're responsible for everything. But while you have a shared responsibility, but so the moment you are at the board,
अभी एस्पिरेशंस भी है लेकिन अभी साथ में रिस्क भी है.
रिस्क बहुत बड़ा हो गया आजकल.
People who want to get out of the system बोले नहीं बनना है मेरे को डायरेक्टर भाई छोड़ दे मेरे को.
सर ने कुछ थोड़ी देर पहले बोला था ना रेम्यूनरेशन के ऊपर.
भाई so remuneration is linked with risk.
It's an aspiration of also many CAs to be on the board, and we have seen, this Nirav Modi scam, PNB Bank, which made people look at it, and there are professionals, chartered accountants on the board of PNB, and it happened, and then it was a major loss and recoveries, and still outstanding issues are there with RBI, and then we had this PMC bank also. So there are lots of issues. So being on the board is an aspiration of maybe a majority of CAs. One is for position, another is for remuneration, both. Or respect and status, reputation.
First. If you're not able to take that, if you're not ready for that responsibility, I think better to avoid it.
Yeah.
Because it has changed.
Now it is changed.
It has changed the way it was, right?
हाँ. राजू भाई
जब तक अच्छा चल रहा है तब तक अच्छा चल रहा है, right?
So I think this topic require another point of
आलोक जी को सेकंड टर्म बुलाओ. हाँ.
So of course,
see one topic itself can take hours. Because it is if you're involved.
I think this is only just to give you an idea. You can't cover.
Right.
And
I am also
not possible.
I am also jumping because I also have keeping because Mayur ji will
of course
disadvantage because he's the second.
Our BFSI
I have taken over that advantage. He wanted to go first actually. I am also running late.
advantage of this thing is that
He will include risk management and specialized investment fund because that is supposed to be medium to high risk. So we will all benefit from this session.
So thank you very much, and it is, I think, a wonderful session. Again, we all say this kind of speakers are making it more interactive, and it is very knowledgeable. We have some gist on our mind, and that this gets refreshed when we meet and learn from the learned speaker. And thank you very much. I request Manoj Bhai to give hearty vote of thanks to him because Alok Bhai wants to give a little early. So just give him the vote.
Well, in fact, I would first thank the chairman, Ketan Bhai, and Vice Chairman Piyush who came here, and felicitated both the speakers who have done a deep dive presentation. Both. It's very important, and acknowledge the contribution of both the topics as very, very vital. So, lakhs of chartered accountants all over the world benefits from the round table. That's very important, and an opportunity to thank, above all, the participations. We had fantastic participation from professionals here, both ladies and gents. Eminent banker, we have, Kinner. He talked about live issues on Forex, on deposits, on ALM, and worked with top well-known names. And participation also, Aditya, Citigroup, raised very, very vital interactive sessions. We made it very, very interactive. And we had very vital issues on risk management, governance structure, basic and advanced on accountability. So it's a privilege to thank really both the people who have prepared presentations and interactive. And we continue to have series of knowledge sharing sessions, as our friend mentioned. So be available throughout. So possibly whenever he suggests part 2 and part 3, I'm sure both of you would be always available.
We'll always take his services whenever he wants.
Exactly. Yes, he is on the committee also. Yes.
So thank you very much to Alok Bhai, and I request you to just introduce Mayur Bhai, and then he will.
Thank you very much for the support.
Come here.
Introduce Mr.
Come here.
That's fine. That's
अच्छा है ना, photo में भी आओ.
To Mr. T. Mayush.
Please.
So he is Executive Vice President of P61 WAM Group. He serves as the CFO at P61 Limited. and leads the technical desk of the group. In addition, he oversees the financial controller function of the entire domestic asset management business, as well as the offshore wealth and asset management platform. With over 18 years of experience across the banking, financial services, and insurance sector, Manu has been navigating complex accounting and reporting matters of banks, NBFCs, as well as asset management businesses. Beyond his corporate responsibilities, he has also contributed to the profession, notably serving on the WRC in-AS implementation committee from 2017 to 2019.
Photograph and then you.
Yeah, just take a come. You come in the photo. It will be nice. You are introduced. Come, please. Nice. Come. Be in the center. Yeah. Ladies always.
Ladies on the.
Yes. Right. Yes. Come in the center. Between both the speakers. Come. It's very important. It's a pride for the group also. Come, Satnam ji.
Thank you.
अरे मुल्ला जी अरे नहीं सीनियर मोस्ट नहीं आ जाओ कंपल्सरी आपका तो कंपल्सरी आ जाएगा यू कैन स्टैंड वेयरएवर यू वांट आइए
He's leaving, but we will have a group photo afterwards.
Thank you so much for your time.
Just start and just ask someone to transition from this one.
Nice, no?
Okay, so good evening, everyone. So I'm starting at almost noon. I don't know how much you guys can stretch it, but I will try to cover as possible. But this is a little bit a new product which has been launched, so might take some little bit more time. So you have to little bit stretch it. Okay. So before I start on the product, like SIF stands for Specialized Investment Fund. So what exactly is the Specialized Investment Fund? It has always been read in parallels with the mutual fund, PMS Act. So it's very important to understand what is exactly this, and then we'll discuss what exactly is SIF as compared to other products. And by default, by understanding this product, we will understand like this product is mean for which kind of investors. So first to start with the mutual fund. So mutual fund, as you all know, it's a more kind of investment vehicle where it is collecting up cash from the different investors. It's a pool of assets, a pool of cash, and thereafter it is investing in different securities. But different securities means includes like stocks, bonds, and money market instruments. And whatever the profit which has been generated by the mutual funds, that has been distributed to all the investors in the form of dividend. So that is the way it has been structured. So definitely by default, mutual funds are professionally managed funds. So when that is professionally managed, the person who is a fund manager, they charge the fund management fee also on that. When it comes to like, if I talk about the mutual fund industry, so like maybe just a 10-year back when Modi ji has just opened up the chart. At that time, in August 2014, I'm talking about, the mutual fund industry at that time was standing at around 10.4 trillion rupees. And currently, if I say about like September, it is after 11 years. So it is right now standing at around 75 trillion rupees. So this is almost more than six-fold increase in last 11 years. So that is the way we are showing expansion growth in the mutual fund industry. Now coming to the PMS business, The PMS business is again like portfolio management services. So again, this is a more kind of a professionally managed investment services where the professional will come and give a customized solution basis your financial goals and risk appetite. So as compared to mutual fund, the PMS is more customized and it is individual basis. Whereas when I'm talking about the mutual fund, it is a pool of assets. So it's a standard format. This is the theme of that particular mutual fund. But when I talk about the PMS, it's more and more about the customized. What exactly is your financial goal? What is your risk appetite? What is the period which you want to make? And the person professional will come and provide you the advice. Again, in PMS, we have three types of PMS. One is discretionary, non-discretionary, and advisory. So it's more about that like end-to-end taking up the charge of the PMS, where the PMS manager will completely do the investment on his own and will not consult with you. And after a period of time, he will give the required return. In case of non-discretionary, he need to take your approval. Every time he do the investment, he need to come and take your approval, and then only he can execute the transactions. And third is advisory. He will just give you advice. It's up to you whether you want to go for it or you don't want to go for it. So that is the PMS business. So again, in the PMS business, again, since there is a professionally managed services, so there is a professional fee also for the fund management. So that is again being charged. Now coming to the third part, which is
In the first case, discretionary,
yeah.
The returns are assured returns.
No, never.
No, returns can never be assured.
Even
It's
in
more
mutual
about
fund,
the
returns are not
historical.
assured.
Yeah, because all these are market driven. So always because they are also investing in the similar stock securities only.
It's not allowed, no? Giving any specific.
Yes.
Yes. SEBI is
You
not
cannot give
You
any kind
cannot-
of a guarantee.
Absolutely, right, Mulal.
Actually. Now coming to the third part, which is the alternate investment fund, which we had already covered in detail in the last session. So I will just touch base this asset, mainly mean catering the requirement of again a fund management for the ultra HNIs who having a very high disposable investable net worth from 25 crores and above. Mainly they are targeting those kind of investors. Yeah? And again, they have Cat 1, Cat 2, and Cat 3 again serving for different requirements. Ranging from the risk as well as the financial goals. So they have a fixed period of time like mutual fund again. But again, this is again a pool of assets, but pool of assets which are HNIs and ultra HNIs. So very, very high risk appetite people only fall in this category. Again, the ticket size of AIF is 1 crore and plus. You have to do a commitment of minimum 1 crore. Whereas in a mutual fund, you can have as low as 100 rupees also. So these are the main parameters over which. Now, if you see in this whole parameters, like mutual fund is more for the return, whereas PMS and AIF is more for kind of a HNI, ultra HNI. Now, in between, there is a class which was not being catered at all, for which they had brought the SI. Now, if I talk about a PMS, the minimum ticket size is 50 lakhs. Mutual fund, 100 rupees. And AIF is 1 crore rupees. So that's the reason the SEBI has brought.
You can also now draw down or 25.
Yeah, so commitment has to be 1 crore. And thereafter it can be drawn on basis whatever the requirement of the fund. So on the SIF now, the specialized investment fund which has been brought. So this is I would say like have a goods of both this world, which is mutual fund, AIF and PMS. So this fund again will cater to the retail investors. Again, it will be a pool of asset which will be invested directly into the securities. The minimum ticket size in SIF is 10 lakh rupees. So 150 lakhs in between. Now this is a new class, which is a SIF. So it's a new class of the asset. That's the SEBI has defined. Sorry.
No.
Okay. Now coming to again the most important differentiating factor as far as the mutual funds are concerned. Mutual fund cannot do any kind of I would say like a derivative speculation trading into the stock market. But when it comes to AIF, they can do it. Category like if I talk about the Cat 3 funds, so which are hedge funds, so they can take exposure up to 200% of their NAV. So that has been allowed category by that because they have a higher risk appetite. So similarly, in SIF also, SEBI has permitted like out of the total corpus, you can still take exposure of naked derivatives up to 25% of the total. It cannot go beyond 25%. So that's why it brings more kind of flexibility in SIF, where you can have a derivative also, and you can enter into a long short position, which is not allowed into the mutual funds.
25% of NAV?
Yeah.
Ongoing basis,
yes.
calculated daily.
Yes.
That's the limit.
Yes. It has to be always, it should not cross the 25%. Anyway, we are going to discuss
So
further.
does it mean we can have 50% short positions, 25% long, net 25?
So I'm coming on that position.
Okay.
I'm coming on that. So now who can create an SIF? So again, like SIF, the requirement of SEBI is that only two types, only the two way you can enter into the SIF. One is a mutual fund company who have a track record of minimum 3 years and they have managed a AUM of minimum 10,000 crores. Then only you can, for the last preceding 3 years, then you can come and launch your SIF.
Average or
average? Average.
Of course, now it is all average.
And second route is that like in case if you do not have that kind of track record, then you have to hire an CIO, which is Chief Investment Officer, who has minimum at least track record of last 5 years of managing a AUM of at least 5,000 crores. Plus, you should have one fund manager who have at least a track record of last 3 years to manage a AUM of around 500 crores. So only in
both condition is to
only
either.
No, either or
route 2 mein plus both.
Acha, both.
In route
And
2,
it is written and.
And.
So it is not or.
In route 1, it's only one end. Because again, here also it's a 2 only because mutual fund has to have 3 years. Then only you can have 10,000 crores of a portfolio in the last 3 years.
Correct.
So both the condition has to be seen together.
Also in this there is also both the conditions.
Both the condition has to be satisfied. Then only you can launch the SIF.
The world, there is no SIF. It is what people are criticizing.
Sorry?
Whatever this product is launched for the first time, the world has no such product like this. Why she wants to launch a product?
No, but
The PMS industry.
as I told you, the reason is only that to cater a kind of a upper middle class, which was actually been not been catered. There are even like in if you see like there was a one statement of the Radhika Gupta only, CEO of Edelweiss Mutual Fund. She was telling that like right now there is a big class of an upper middle class who are earning like 70 to 80 lakhs per annum. Now they cannot come directly into the HNI category. They are not even retail category. So there is some product which is required to cater their requirement. So that is probably the reason, and that is a big class. So that's the thing, because they are maybe ultimately move to the HNI and ultra HNI category at a later stage. So that's the reason they want to cater this category, and that's the reason they have launched this product.
Currently, are there any fund available?
Yeah. So Quant Mutual Fund has most probably 2 days back only they had live one of their SIF, which is long equity short. Rest are in still progress. Like by first week of October, many of the funds are about to launch. Maybe Edelweiss is also about to launch one fund or hybrid.
So of course in ANC also the criteria about the ANC itself.
Yes.
So that is also there.
Yes.
So who are the ANC? So then only you fall under the ANC and you can satisfy the
Correct. Now this is just a story so far, like why the just so much of things that just happened like from December 2024. So in December 2024, the first time the SEBI has introduced the regulation in the mutual fund regulation itself as a new asset class. So it is very important to note like the structure of SIF is same as mutual fund. So it will be again a trust based. So there will be a trust in that, and from there only it has to be flowed the SIF. It will not be a PMS, it will not be AIF. The structure, the main construct is based on the mutual fund.
So the transaction will happen in the name of the SIF, not in the name of the individual investor.
Yes. So that means like the fund will do all the transaction, and that will give a lot of tax benefit to the investors. Because at a fund level, there are no taxes. So investor will get that benefit. So you can have a numerous of churn out, but there will be no tax on that.
PMS, it is done on behalf of individuals.
So that is the biggest advantage.
Tax is on the individual.
Yeah. So that's the reason it is very important to know like this is again a trust level. The structure is purely as same as
similar as mutual fund.
So for me, it's also long-term, short-term game.
Yeah.
Whatever in the condition that I'm.
No, but the fund. No.
For us, it's a like a dividend distribution.
Achha, for us, it's a dividend.
It's a dividend. If you are an investor in SR, for you, it's just a dividend distribution, like mutual fund. So
not like PMS.
No, not like PMS.
This is open-ended or it's completely?
Again, both the things are available, open-ended as well as closed-ended. But majorly, it's like close-ended only. Yeah.
Right now, they are going to float only close-ended.
No, there are different strategies which SEBI has nominated right now.
Only difference is amount, basically.
Sorry?
Only difference is amount.
Yes.
For SIF, we have to have 10 lakh.
Yes. Minimum ticket size is 10 lakh.
In mutual fund, there is no, I mean.
100 rupees.
But even you can get derivative.
Yes.
Not allowed in mutual fund.
We are discussing again a comparison with the mutual fund and letter side, which will give you more complete perspective,
Yeah.
like how it is different from the
Okay,
mutual fund.
sorry.
So first time this concept has been introduced in 16 December 2024. Thereafter, in 2025, Feb 2025, whole official SIF circular has come up and which has mentioned a ticket size of 10 lakh. Thereafter, in April 2001, which is the effective date from where the SIF become effective in India. So that was the effective date. Thereafter, again in April 11, the SEBI has come up with the application format in which the different AMC can fill up and submit for their SIFs. And from 16th, like I would say, like up to 16th July 2025, based on the Reuters news, almost 10 AMC has already filed for the SIF, and which includes like SBI mutual funds, ITI Quant mutual funds, Edelweiss mutual fund, and some of the foreign firms are also involved.
Why is everybody launching long shot?
Because that is the most beneficial thing. Otherwise, you are not going to create any impact. Because in the long, see, in the mutual fund, you cannot do the long shot. Just to give understanding, like, what do you mean by long shot? Just common man to understand, like long shot in mutual fund. If I want to, I can be only long. Say I want to purchase a Reliance, but I know like Reliance is going to fall. Then you will not purchase. But I cannot take any benefit of falling market. Yeah, that is the biggest disadvantage in the mutual fund. Mutual fund is only about the long part. But when it comes to AIF, I can be a long, I can be also short. So AIF regulations allows you to do the long short positions. Now that has been allowed in SIF also. So in SIF also, you can do long short positions. So you can purchase also and you can sell also. So those kind of naked positions, which I was talking about, the naked derivative positions. So naked short can be taken up to 25% of your total corpus.
Futures can be sold.
Yes. F&O, any kind of F&O.
Options also.
It's a purely derivative. So this will also impact like structured products which are being sold separately. Now structured product market will also get impacted because of SR. People are investing in MLDs. In MLDs, there are other complexities and tax benefits may not be that much available as compared to SR. So people might move from structured product also to SR.
Because it's more regulated.
And professionally driven and lot of advantages which is coming because of the SR. Now, subscription and redemption, the most important thing about the SIF, when you launch the SIF, you cannot launch in your existing brand. So Edelweiss cannot launch the Edelweiss SIF. Quant mutual fund cannot launch the Quant SIF. They have to launch a new brand. So Edelweiss has launched Altiva as a new brand. Quant has launched QSIF. Bandhan has launched something Aradhya SIF. So they have to come up with a new brand. The requirement was that like SEBI wants like retail investors should not get confused between a mutual fund and SIF. So that's the reason they have mandated whenever you are going to launch the SIF, it has to be completely new brand. It cannot be done under the existing brand.
That new
Mere has
brand
also
will-
launched, no?
Yeah.
What's the brand?
I don't remember. Yes.
That new brand
Yes.
will always get associated with the parent brand, original
I
brand.
agree. But at least
So that
people,
separation is just theoretical.
that I agree because the fund manager is
At least the name is different, so it looks like that it is something different.
some at least some awareness would be there.
For
It is not a
example,
mutual
Edelweiss
fund.
while launching new this brand, they will make sure that it gets associated with it.
Yeah.
Successful one. Successful one.
They will create an image.
Yes. Even they
Creating
would be.
image without violating SEBI norms is not difficult.
I agree, but at least intention of SEBI was very to do that. Like you should, the retail investors' interest should be get protected to the extent possible. So
तो
that's the
इसका
reason they.
म्यूचुअल फंड सही है तो उसका और कुछ होएगा,
हाँ, हो सकता है।
राइट? स्पेशलाइज्ड इन्वेस्टमेंट सिर्फ
हो सकता है।
जरूरी है।
जरूरी है। Okay, second important point related to this subscription is that the 10 lakh limit is not per scheme. It's at a PAN number. So you can have different schemes. The total amount is should be 10 lakh. It should not fall below the 10 lakhs in all the schemes. Now there is a little bit gray area. Okay, like if you are investing in Edelweiss and you are investing in Quant also, whether the 10 lakh should be together or it has to be at AMC level. So that is still a gray area, but probably it seems more like at AMC level because AMC can track it. If it is at a different AMC, it becomes difficult to track the 10 lakh limit. So that is very important that 10 lakh limit has to always and always all the time has to be maintained. Now, the another
Can't go below 10, you were saying.
But
So by default,
starting
starting point.
NAV goes below then.
I'm coming on that point. So even the passive fall because of dip in the NAV and because of which your NAV, your total investment is going below 10 lakh limit, then you have to do complete redemption. It's not no partial redemption is allowed. Complete redemption has to be done. Either you have to immediately fill up shortfall. But you can always fill it up because now there is a requirement at least 30 days notice will be given to fill up that shortfall. But if you do not fill up, then the AMC has a right to sell it off and liquidate the whole exposure and give it back the money to you.
Amount to.
So you are forced to book a capital loss.
Yes.
Is that legal? Constitutional?
Yeah, it is required by the SEBI. You have to always maintain the 10 lakh. If you do not want to bear the loss, pay the money.
No, you don't have the money. You have a risk appetite and asset allocation. You allocated a time.
No, that's what I'm saying. So you have to invest
So that
10
means you
lakh.
are giving a mandate in the application form itself.
Yes, it will be there.
It will be. It has to be there. No?
So 10 lakh limit is the upper limit you are saying.
No, this is
Minimum.
This is the minimum investment.
10 lakh is the.
You can have higher amount.
How
Then you can
as much
have
as
1 lakh, 1 lakh, 1 lakh. So AI also, you can have 1 crore minimum, but then you can pay 1 lakh. That's okay. But 1 crore is minimum.
When I say 10 lakh every year.
No, not every year. It's one time.
Once.
Minimum amount should be 10 lakh. Thereafter, you do not want to do anything and your investment going up, then you don't have to do anything.
Basically a bullet investment and non-diversification is what they are doing.
Yeah, you can say that.
No, but suppose as you are saying, we can invest in.
But here, yeah, sorry. Here also you have a right. You can do also SIP, SWT. All these things are allowed, which was allowed in the mutual fund also. So you can have also systematic investment plans. So you can keep increasing your investment if you want. So that is also allowed.
They are increasing concentration.
No, so we will discuss on the strategies. So it's not like very concentrated. Concentrated is one of the fund, but not all the funds. Other funds are also open-ended also. Yes, sorry.
So I can invest in 2 schemes, 5 lakh rupees.
Yes.
In the same.
But within the same AMC.
Same AMC.
Same AMC.
Right now, it is not written, but
It is
implied is same.
It's like that only. Okay.
It will be named as SI.
Yes.
So if I do say 2 lakh in mutual fund with the same area.
₹50 lakh PMS में वो इसमें
It is
charge.
not allowed that I do a 3 check amounting to 10 lakh in 3 months. That I cannot.
No. First should be 10 lakh. Thereafter, you can have a SIP of any amount, whatever you want.
So basically, they are just ensuring a minimum commitment of 10 lakh. With the
Absolutely.
Correct. Like 50 lakhs in EMS that we generally have.
Because they are giving you new products to invest.
Absolutely.
That kind of risk appetite a 10 lakh person can take. A 10 lakh.
Yeah.
And MLD is of course have some issue of secondary market sale here, so you can have sale anytime whenever you want.
And after 3 years also, if the market crashes and it comes below 10, even if I have done 12.
So then they will give you a 30 days notice. In that 30 days, whatever the shortfall is there, you have to refurbish that shortfall. If you refurbish, then there is no issue. But if you do not refurbish, then after 30 days, they have full right to liquidate your investment and give it back.
But that may amount to liquidating within 30 days. If that time market condition is poor, then it will amount to redeeming at loss.
Yeah.
Loss, which if I don't want.
Yes.
I am not in a position to put more money. At the same time, I don't want to sell at loss. So that situation is not provided. But 30 days is quite a short period.
Loan against mutual fund in 10 minutes. So अभी तक ऐसा में आया नहीं है loan against mutual fund. So you don't want to redeem, you don't want to pay the tax. So they give loan against mutual fund. So you technically get a loan and use it. The loan लेना पड़ेगा. Against the limit.
Again, you invest in the shortfall.
Loan against ऐसा कभी आया नहीं. आ जाएगा.
Individual basis or total SIF basis still. So all will
लोन कैसे मिले? लोन तो वो ऑलरेडी पोर्टफोलियो डाउन हो गया है, ऑलरेडी पोर्टफोलियो डाउन हो गया है। उसके ऊपर
9 हो जाएगा।
8 लाख पे 4 लाख और देगा लोन, ऐसा? हाँ, ऐसा 8 लाख पे 4 लाख। हाँ, नहीं वो समझ गया, ये नहीं, इसमें आई डोंट नो। 10 लाख वाला लोग के पास रिसोर्सेज ज्यादा है। द लॉजिक इज दैट
only 10 लाख इन्वेस्ट करेगा ही नहीं पूरा 10 लाख।
हाँ, तो that's the logic is that only, that if you are able to please I think that is better, otherwise we'll get misguided.
Same way like in the mutual funds, so here also it's like SIP, systematic withdrawal plan is also allowed, systematic transfer plan is also allowed. Same way like what we are doing in the mutual fund. So these have been allowed. But in all the times, as I told, like 10 lakh limit has to be maintained.
SWP is not allowed if the fund doesn't have that adequate amount. So like
No, fund nahi. At your individual investment should not fall below 10 lakh. If you have a 15 lakhs, then up to 5 lakhs you can have systematic withdrawal. But once it goes down 10 lakh, then it should not be allowed.
yeah.
Then you have to immediately refurbish it. Yes. Now let's discuss like what is the difference between SIF and mutual funds. So some of the points which we have already discussed. As far as the regulator concerns, both have been regulated by SEBI. The structure and construct is completely based on the trust only. The minimum investment size in SIF is 10 lakh rupees, whereas in mutual fund it's 100 rupees. 100 to 500 is a minimum ticket size. Then investor type, mainly it has been cutting the requirement of HNIs, professional and accredited investors. Whereas as far as the mutual fund is concerned, mutual fund is for each and everyone. Anyone can invest it. The strategic flexibility. Now, this SIF provides a lot of strategic flexibility as compared to the mutual funds. Because as I told, like in mutual funds, you cannot take long short positions, which is now been allowed in SIF. So if you are thinking like market is going to get fall because of the tariff issues or geopolitical issues or because of the war between Russia and whatever happening right now, and you are expecting like market would going to be bearish. So at that time, if you are investing in SIF, they can take a kind of a short positions into the market and you can make profit out of it. But that is not under the mutual fund, because under the mutual fund, you can take only kind of a short positions against your existing long positions. So mutual funds also can take derivatives, but only an offsetting derivative positions to your existing long positions. So it should be offsetting and only purpose for the hedging. Whereas in SIF, you can take in naked positions also. Means you are just thinking like you do not have any securities, but you are expecting like any XYZ security is going to fall tomorrow. You can take that positions. So that is allowed under the SIF. And as the biggest benefit, as I told, like in the SIF as well as mutual fund, since the taxability would be whatever the churnouts which are happening at that trust level or fund level. So there is no taxability at the investor level. So a number of times when you are purchasing, selling, there is no tax at the investor level. The investor has to pay tax only when it has been distributed in the form of dividend to the investors. Till that time, there is no taxability. Okay, and similarly on the taxability also, it is at par with the mutual funds. So if it's an equity based kind of a SIF, then it is par at a mutual fund also. The mutual funds, the long-term capital gain is taxable at 12.5%. The same way in SIF also it is 12.5%. Similarly, in case of debt instrument, so in debt instrument it is forming part of your slab rates. The same way here also, debt instrument will fall part of your slab rates only.
There is no lock-in in SIF?
SIF, there can be a lock-in purely based on the, again, theme to theme. It's not mandatory to have, but sometimes it can have a lock-in.
One can exit in 3 months also, subject to exit charges. Suppose I invested 10 lakh.
So here, so here on the liquidity part, it says that like in mutual fund, you can sell it immediately also. Yes. Today you have purchased, you can sell it tomorrow also. Yes. But in SIF, it may not be possible. Again, it may vary from fund to fund. Maybe say equity, long short funds, it may allow you daily redemptions also. But maybe for debt funds and maybe like asset allocation funds, it may not allow you to have a daily churn. It might say like it can be done in fortnightly basis. Within 50 days, only one settlement. Or within 30 days, only one settlement.
There is no lock-in as such.
So that's a kind of a
Lock-in for that period.
So if you want to liquidate your investment, then you have to give 15 days notice. And after 15 days notice, it's like you are given, like say today you are given the notice. Now next duration, next settlement date is coming on 30th October. So then your settlement will happen only on 30th October. It will not happen in this month. By that time, market price can go up and may go down also. So that is the kind of risk is involved in that.
Then you can withdraw the notice. So, make your account.
That is a different thing, but right now we have that risk because as compared to the liquidity is there, mutual fund is highly liquid, but SIP is not that liquid.
This concept of accredited investor was not there in India earlier.
Sorry?
This concept of accredited investor.
No, it is there. It is there.
It's there.
It's a SEBI definition of accredited investors where you have annual income of more than 2 crores and net worth of 7.5 crores, then you can get registered as an accredited investor. And if you are registered as an accredited investor, then limit of 10 lakh is not applicable to you.
They can invest lower also.
Yeah. So if you get registered yourself with the SEBI as an accredited investor, then that limit of 10 lakh is not applicable. Your investment limit can go below 10 lakh also. You can invest 5 lakh also.
But SIF will invest only in financial assets like debt, equity, mutual fund, not in
No, so it can be derivatives also.
commodities also.
Commodity not,
Like gold,
not been involved because they invest in financial assets which are linked to commodities. So like ETF, gold ETF, silver ETF, they can do that kind of investments. But not directly on the
commodities.
Sorry.
Who can be registered under this category which allows below investment below 5 lakhs?
Anyone like who has these two criteria meeting, like they should have an annual income of more than 2 crore rupees and net worth of more than 7.5 crores, excluding their self-occupied property. So that they can register with the SEBI as a accredited investors.
Somebody has to sign a mutual certificate.
वो SEBI का requirements आता है, वो that requirement is to certify, then they will submit and then SEBI will verify, and if they find it, they will give you the accredited certificate.
Yeah, a lot of people are.
Many people do.
It's a system driven.
You are meeting the criteria, then no one going to stop you. That's simple. Okay, just one thing again, like on the risk level, as again SIF, again it's a highly risky because as I told you, like in SIF, if you are taking derivative positions, which can make a very big exposure. So when I say like 25% exposure, so that's about the premium amount. So your premium amount is 25%, but your notional amount can be 4x of that amount.
Correct.
So you are taking a huge risk in the SIF, which is not allowed under mutual funds. So that's why it is higher risky as compared to the mutual funds. Now this is another comparison of SIF between the PMS and AIF business. So here again, all these things have been regulated by the SEBI. The minimum ticket size is SIF 10 lakh, PMS 50 lakhs, and AIF 1 crores. Investment format, again, it's a unit of a pooled funds direct. In the PMS, it's a directly stock investment on behalf of the client, which we discussed. And AIF, again, it's a unit in the pooled funds. Now, one more thing which I want to discuss over here is the AIF Cat 3 funds. Now, SIF has bring a lot of big disadvantages to Cat 3 funds. So if I talk about the Cat 3 funds, so Cat 3 funds are the funds which are like more kind of hedge funds and mainly been investing in the listed entities, listed securities. Like they have a requirement of almost 45% has to be, 55% has to be invested in the listed security, and up to 45% they can invest in the unlisted securities. But mainly they are doing a lot of derivative exposure. Again, in the Cat 3 funds, you have been allowed to take 2x of the exposure of in the form of derivatives. Now coming here in SIF, in AIF the minimum ticket size is 1 crore. In Cat 3 funds. Now if I talk about the SIF, this limit has got reduced to say 10 lakh rupees. SIF also can take derivative exposure. They can also take up to 25% of your total corpus as a derivative exposure. It is also providing the same benefit, which is now if I talk about the AIF in Cat 3 funds at a fund level, because it is taxed at the fund level itself. In Cat 3 funds. not Cat 1, Cat 2, but Cat 3 funds are taxed at a fund level.
Correct.
The fund only has to pay the income tax, and that tax rate goes up to 40%. It's a very high tax. When it comes to SIF, if an SIF, there is no tax. Ultimately, it is coming at the investor level. So if the investor is falling maybe at a different slab rate, so that tax get reduced to that level. So that's the biggest advantages of SIF as compared to the AIF Cat 3 funds. And that has created a lot of issue like whether this should be considered as a debt of AIF Cat 3 funds or should be considered like now AIF 3 has to come up with a new strategy. So again, like in long short position, which was only AIF in Cat 3 funds, now allowed in SIF also. So actually seeing like it's a more kind of a sub format of a Cat 3 funds. Whatever the features which has in Cat 3 funds, all those features are available in SIF fund.
Foreigners are allowed to
SIF
invest.
fund can be anchor investor. They can also invest as QIP in a public issue. Everything is allowed.
Yes. They can invest in unlisted securities also.
Oh,
SIF.
Yes.
oh, क्या बात है?
And no limit on that.
A
No,
limit can
दो
be
दो
there.
रहेगा
Limit
ना,
will
वो
be
तो
there.
रहेगा.
Foreigners are allowed to invest
Not
in
guided
SIF.
5%
Foreign funds.
Foreigners.
Foreigners and NRIs, FPIs, FIIs. Can they invest through SIF?
So mutual fund में भी तो allowed है ना, mutual fund में भी
NRI is allowed.
नहीं वो अच्छा foreign this
नहीं, but वो फटका, if you give the फटका regulation, you have to say कि like.
yeah, but that is है ना, but those OCI is not allowed.
Okay.
OCI is not allowed in mutual fund.
I think.
Okay.
तो SIF में allow नहीं करेंगे.
भी वही होगा. It will not be applicable.
नहीं, it has to be local.
खाली इसमें LLP and private limited and all those are allowed. They
They are resident
domestic
Indian.
only, they are
They are
domestic.
resident Indian. They are
Domestic,
allowed.
They can invest. Yeah, this OCI and those PIO are not allowed.
Yes.
Portfolio disclosure.
Sorry.
Portfolio disclosure.
So NAV part, like for mutual funds, you have like a monthly NAV statement. Now, when it comes to the SIF, they will not provide monthly. It will be provided quarterly NAV statement. NAV statement like your whole investment, where the amount has been invested and how the value of your total investment has been derived.
After 1 quarter.
Yes.
You will get daily NAV.
Par, it would be at par with like a AIF also. AIF also provides quarterly statements only. They do not provide monthly. So same way like SIF also may not provide on monthly basis. So transparency wise, mutual funds are more transparent as compared to.
So the daily NAV now.
But here also NAV will be given to you daily. Maybe you will not get the full statement, or you can't get NAV also. No.
You may not get it.
So how I invest if I invest today, then what is my NAV?
So that time you will come to know somewhere.
Achha,
Like
that
it
is
might
big.
mention in that like today's some yield would be provided by that for the purpose of calculation.
Oh.
But how practically it will happen, because your statement will come on your quarterly basis. It will not be available.
It can get violated in
जैसे
between.
म्यूचुअल फंड में अपने को मंथली आता है वो क्या बोलते हैं कि
क्या आता है म्यूचुअल फंड?
इनकम जो ना मंथली
म्यूचुअल फंड में आप डेली मिल सकता है.
Daily मिलता है ना, daily.
म्यूचुअल फंड में डेली नहीं.
So this 10 lakh limit will get violated in between period. It can be. If there is no.
That will come. That's what I'm saying. As a part of your statement, you will come to know.
No, but.
How they will monitor the test.
That is what I'm saying.
Tell you, like if it is falling below the 10 lakh, then let you know.
They will monitor it, but they will not make it public. That's what
Yes.
they will monitor it.
So what's the purpose then? If public who is an investor doesn't come to know and they are monitoring it, what is the purpose?
So why problem? Yeah, I think monthly disclosure are any. Some of them are giving.
Majorly that is only again Cat 3 funds, but not for Cat 1 and Cat 2.
Not one hand.
1 and 2 you will not find out like it has been provided, because for them it's a big exercise to calculate the unlisted equity shares valuation. That cannot happen on.
That is a big thing. Yeah, that is a big thing. Correct. That's a big thing. That's a big thing. Correct.
For listed it is easy to do. They can do it.
Possible. Yeah, it's already possible.
Also they can do that.
वो तो म्यूचुअल अपना मनी कंट्रोल ही दे देता है आपको, रोज दे देता है.
SME भी आ सकते हैं. SME listed.
SME, so their theme will not be like SME. They will think long short equity or hybrid equity or asset allocation equity. They may not say like it's only SME. Sectoral में, in sectoral if they have sectoral में they mention it as a part. So these are the investment strategies. So SEBI has prescribed three investment strategies. One is equity oriented strategy, second is debt oriented strategy, and third is a hybrid strategy. If I talk about the equity, again the equity long short position, equity long short fund is available. In that, minimum investment in the equity shares has to 80% of your total investment should be in equity shares only. Second is the equity X top 100 long short funds. In this category fund, your total exposure in equity other than the top 100 listed equity shares should be 65%. And in the sector rotational long short funds, in this rotation funds, you can invest up to the 4 sectorial funds with 4 sector category, and each of the total exposure in the equity should be 80%. So these are the requirement more applicable at SIF level, not at an investor level. While putting any kind of strategy, they have to follow this is the principal rules.
Second one, you said 75%.
65%. And that is excluding the top 100.
Unlisted also one can do, no?
SIF, yes.
100% also.
100% they will not do it.
They can do, no?
I think so, yes. Or that
is a very good model for replacement of AIF. AIF में 1 करोड़ नहीं है तो
Exactly.
ऐसा फॉर्म कर दिया तो 10-10 लाख तो कहीं से भी आ जाए.
Yes. And that is also the NAV. That is also the face value. You can do in calls also, no?
वो नॉर्मल लेमन नहीं कर सकता है ये कैटरी ऐप तो नॉर्मल कर सकता है उसका 10 करोड़ का ही रिक्वायरमेंट है. ये ज्यादा रिक्वायरमेंट बड़ा है वो
10 लाख का.
नहीं ये that fund manager required and all those things.
Yes, that is the thing. Anybody, Tom, Dick and Harry is doing.
नहीं कैटरी है मैं तो एटलीस्ट 10 करोड़ है तो मैं कर दूं चलो.
हाँ.
उसमें तो कोई दिक्कत नहीं कि 10% of the corpus that I have to be
for launching the
there. But here ऐसा है मतलब अपने लिए नॉर्मल 10 करोड़ वाला जो फाइनेंस कंपनी
you have to bring out the CIO who has that experience of 3 years, 5 years or 5,000 crores.
So when they are retiring or they are leaving, there are lots of people. So they can give their name attending to such.
Typical Manoj bhai.
This happens, no? Exactly.
Yeah. SIF has to choose its strategy while coming out with this offer document.
Correct.
Having chosen that, can it be changed?
No, they cannot change it.
It can't be changed.
No.
Then it becomes very rigid.
So like you are today investing in say like gold ETF, mutual funds. I'm taking you are taken invested in like a hybrid equity or maybe any kind of equity mutual fund. So that theme has been decided on day one only. Within that thing, they can play it. So if it says like 80% equity exposure has to be done, so equity exposure has to be done. They can sell Reliance, purchase TCS.
Within equity.
Within equity, they can definitely play it. But their total exposure in the equity should be always 80%. That cannot be fall below. So those are the principles they have agreed. Like this principle has to be followed, and thereafter within that you can play whatever you want. So that is been allowed.
Within that category.
Yes. Now coming to the debt long short funds, here again like the fund SIF can launch a fund where they want to have a long on particular debt and they can do a short by taking derivative positions on particular again debt funds only. The sectoral debt here again it has been allowed and maximum the sector debt can be taken on only on 2 segments, 2 sector and not beyond that, and the limit over here is 75%. So minimum investment in debt securities of 2 sectors should always be equal to 75%. Third strategy, which is a hybrid investment strategy. So in the hybrid investment strategy, active asset allocator is more a kind of a multi-asset fund where it will be have a compromises of a like equity, debt, InvITs, REITs, everything is allowed in this. And second is a hybrid long short funds. In the hybrid long short funds, it should be have a like a 25% equity and 25% debt. So this is these are the main principles in which the SIF would be launched. Now this is just an example how that exposure of 25% of derivative would be applicable. So if say like an example like total fund is of 100 crores, so on the day one itself they can say like I would be investing in equity 70 crores. Cash holding is 5 crores and 25% which is like 100 ka 25%, 25 crores would be in the naked short or derivative position. So this is allowed. Second way is that like since as I told like even the mutual funds can take hedging positions. So same way SIF also can take hedging positions. So here in this second strategy, investment in equity is 62.5, then cash holding is 2.5, making it 65. Derivative holding is coming 35 crores, which is 100 ka 35%. But out of this 35, 10 crore is only for the hedging. So that will not be considered for the purpose of calculating the 25% threshold. Only the short naked position which has been taken 25 crores, that will be considered for this threshold limit. So for taking hedging, you can take any amount. That is completely been allowed. But for taking short naked position, only 25% of their total call cost can be taken, not beyond that.
SIP is not multi-asset allocation, it's only equity and.
It has
It's gold and everything.
in this like in this first class active asset allocator, you can have REITs, InvITs, everything is allowed.
So in a hybrid, equity oriented and debt all. Hybrid you can do anything.
Yes.
So gold, silver,
Yes,
any
yes,
kind.
yes.
Oh,
ETF would be there.
energy, a lot of things can be. It's a wonderful product. मतलब वो 1 करोड़ रुपया नहीं तो 10 लाख रुपया वाला तो पब्लिक बहुत मिल जाए.
Exactly, that's the reason. Like if I talk about like it is expected by end of this financial year, which is March 2026, it is expected at least if it goes as per to the expectation of moderate range, that at least 40,000 crores AUM is going to come into the market. Minimum 40,000 crores. AIF or even the new investor will also come. Probably who are not yet entered the market, they will also come.
10 लाख रुपया तो दे सकता है. At least तो साला 1 करोड़ का.
People will also come from like banks deposit may also get impacted because of this.
ये regulated है. Non discretionary नहीं तो regulated नहीं. At least मेरे को यहाँ तो regulated तुम 50 लाख मिनिमम है ना. अगर 50 लाख के नीचे करना है तो regulated नहीं है ना.
And here
non discretionary discretionary दोनों में 50 लाख चाहिए अभी तो.
And here again, like if you talk about the debt oriented strategies, those are very low risk. So those people who are very risk conservative, they can also go for this debt oriented scripts because they provide a more kind of a exactly that's what I'm saying. No? So they are again नहीं debt fund is slab rate. वो टैक्स बेनिफिट नहीं मिलेगा.
नहीं वो तो अभी खत्म हो गया. वो तो कहता स्लैब रेट ही ना. खाली 2 साल का जो है वो ही.
Zero coupon bonds, the listed 1 year plus, in fact, cumulative bonds, अभी भी आएगा.
Structure product.
So that fund will going to get a good benefit. But the hybrid is equity, debt and multi-asset, everything.
No. So asset allocator, the first part, which is active asset allocator, there you have a REITs, InvITs and everything. In this hybrid long short fund, it is only debt and equity.
Debt and
25%, 25% both.
Wonderful.
Now this is about the liquidity and exit rules. So as I told, like SF may not provide exit every time. So they have some, many of these funds may come up with a specific rules related to the liquidation and redemptions. So it may requires you to have at least 15 days early notice, and in May some of the SFs may provide it like fortnightly basis redemptions or maybe providing only on month end. So those kind of restrictions would be there, and again it differ from fund to fund and AMC to AMC. Sorry.
So in 360 WM, you have this SI?
No, we have just filed it under the name of Dyna. Yet to get the NOD from the SEBI.
Equity long short and long short equity. What's the difference? So नीचे जो debt long short hybrid.
Exactly.
You share this with you also?
Yeah, sure.
In our group.
I will share it.
How many we can't read the small print?
Yes. I think so. It's a typo error. I'll just check exactly where exactly.
No.
Now, risk assessment. So again, as I told you, like there are 4 categories, mainly the like low risk, moderate risk, and high risk, and very high risk. So again, it differ from purely basis like what exactly has been written in the initial offer letter from the SI. So one has to read it, and this is that risk only. The I would say the regulatory compliance will also get differ, as well as investors' return will also get differ.
So I
risk and
can
reward
have those all the 4 categories of SI,
Yes, yes, yes.
and I can launch all the 4 category, low, average, minimum.
Yes, so strategy would be what we discuss out the 3 strategies: long short equity, long short debt, and long short hybrid funds. Within that, they may classify like what is the risk. So this is only the risk categorization, whether they have the low risk, high risk, or moderate risk, or very high risk. So that way.
PMS guys can't launch this year. This is
Sorry.
PMS people cannot
Any asset
No.
management company can launch na
They
SI.
can.
PMS cannot launch. AMC can launch. Who is
PMS cannot launch.
mutual fund
तो
business.
वो PMS जनरली कोई बड़ा एसेट मैनेजमेंट कंपनी के पास जैसे मोतीलाल एसेट मैनेजमेंट तो दे कैन लॉन्च हाँ नहीं वो ऑफ कोर्स
नहीं, उनका दूसरा
ऑलरेडी कवर्ड है ऑलरेडी कवर्ड
अदर क्राइटेरिया CIO या फंड मैनेजर उनको
whatever the
It's like mutual fund is like PMS.
mutual fund.
Not like PMS, no?
So I invested in unit
Short term, long term.
and I redeemed the unit. That is short term long.
Correct.
And
but for you, it's only dividend distribution. It's not like short term long term, because short term long term is mainly applicable when AI. Because in AI the structure is passed to
PMS
in Cat 1, Cat 2 funds. But short term, long term, that applies to the investor also. But in mutual fund,
mutual fund also. If I invest in mutual fund, then I redeem the
units of mutual fund.
So unit of SIP same. So I can have a growth scheme and also have a dividend scheme.
Correct.
Oh.
But only thing is that partial reduction is not allowed. Partial reduction is allowed if your limit is above 10.
About 10 lakhs.
Not below 10. That's only the.
Because mutual fund में 500 रुपया ही है. Oh.
So that may not be allowed.
So SWP, as long as if I'm above 10 lakh,
Then it is allowed.
Otherwise तो उधर stop हो जाएगा.
Correct.
Oh, interesting. प्रोडक्ट जबरदस्त बना है. क्या बात है मयूर भाई यार, मयूर भाई ने फटाफट और क्लियरली हैंडल किया है. ये प्रोडक्ट बहुत सुंदर.
Great work.
और ये
Lot of effort.
अंडरस्टैंडेबल ये में क्योंकि ये 1 करोड़ और ये जो 500 रुपए के बीच वाले लोग हैं ना वो बहुत मिलेंगे. बहुत इन्वेस्ट.
इसका जो साइज है ना जो मतलब people of
and it's upcoming and lot of flexibility is granted which AI also has
liquidity I think they will have to work on it.
जो cat 2 cat 1 cat 3 तीनों को दिया है
वो चाहते हैं कि like if you are investing you should invest for longer period of time. You should not think about कि like आज मार्केट गिरा तो लिक्विडेट करना लो. उनको वो चाहिए भी नहीं because ऐसे लोग फिर क्या वो मार्केट में अननेसेसरी because यहाँ पे क्या रिस्क भी बहुत ज्यादा है. तो वो नॉर्मल इन्वेस्टर के लिए हेवी नहीं. दो दे प्रेफर्स के like the people who understand the market, they have good risk appetite, they should only enter into it. So that's the reason they want to keep these kind of values.
ये दो मेजर एडवांटेज है, एक तो टैक्स का और दूसरा डेरिवेटिव ट्रांजैक्शंस कैन आल्सो बी डन इन एस.
करेक्ट. एंड लॉन्ग शॉर्ट पोजीशंस.
अरे सबसे बड़ा एडवांटेज सी यू आर एंकर इन्वेस्टर, यू आर QIP.
You are a QIB.
There as a mutual fund and AI both is available to you. You can invest in unlisted shares. You can invest in gold, REIT, InvIT, silver, oil, मतलब वो जो that is energy. क्या चाहिए इसके अलावा यार?
Say between mutual fund and portfolio management discretionary. So between the two, for a normal investor who may not be HNI but is quite knowledgeable. So this PMS discretionary, don't you think is a better option?
So PMS discretionary is a very good option, but the point is that like there will be fees attached to it. First thing is that. Second thing is that it is a very customized to your requirement and your risk appetite. Once you invested, they might say like since it's only for you and you are saying like financial code is for 5 years. Then 5 years is almost they prefers to keep a lock-in period. Okay, once you invested, don't see that portfolio till 5 years. We will not do this because and third, the biggest disadvantages in PMS is that if they do churn out to meet your requirement, then you have to face the taxability, which is not there in mutual fund. In mutual fund, you whatever the number of churnouts you do it, you do not have to face any tax.
Any tax, correct. On this PMS, the biggest problem. See, last year my fund has given 33% return. My fund is AI have given 33% return. PMS nil return because last year से index ही नहीं बढ़ा है, stocks भी वो specific नहीं चला है. तो कहाँ से PMS में return आएगा? PMS we are not able to get any return because most of the PMS not able to give those written which AI has given. PMS का वो डिस्क बिकॉज आपका कौन से टाइम पे PMS में इन्वेस्टमेंट वो तो इंडिविजुअल है ना, मैंने 5 साल पहले किया तो मेरा रिटर्न ज्यादा होगा, आपने लास्ट ईयर किया तो 1 साल में कुछ आया नहीं तो आपको कुछ भी नहीं आया, तो मेरा अच्छा रिटर्न है।
SIF का जो इन्वेस्टर है has to pay fee to the SIF.
Yes, sir. There will be fund management fee which can be around 2 to 2.5%.
अच्छा, so that is also the same, like mutual fund 2 to 2.5.
Yes. It would be in the range of 2 to 2.5%.
मतलब NAV से adjust.
SIF.
अच्छा, performance fee भी मतलब
होगा.
by hurdle rate and then
Correct. Correct.
I can
There would be a performance fee also.
They will link it to NAV. NAV से deduct कर देंगे charges.
हाँ, realization basis.
हाँ, SIF में realization basis पे ना.
क्या चीज का?
If
Performance
SIF one goes for a hurdle rate, whatever this thing, then it should be on the realized. PMS में तो unrealized भी पैसा खा जाएगा. वो क्या मतलब है यार? शेयर मार्केट में अनलाइज पैसा।
हाँ, वो तो 2% मोतीलाल ओसवाल का मालूम है क्या? 2% का फिक्स है।
हाँ, क्या मतलब?
2% फिक्स लेता ही है वो, मतलब हर महीने का वो काट ही लेता है, पैसा कमाओ कि नहीं कमाओ, उसका वो रियलाइजेशन वाला मॉडल
HNI can do it. HNI, he can spread amongst different categories.
Yes.
Mutual fund, PMS, AIF, and then compare for himself rather than someone telling him that AIF is better or PMS is better or mutual fund is better or for that matter direct investing. He can spread across all the 4 categories and then compare for himself.
Absolutely.
When it is launched, already started?
Yeah. So Quant mutual fund.
His company already.
अच्छा, 361.
We had only not launched. We had given to the SEBI for approval.
So the documentation is already made now.
So almost 10 AMC has already got the NOC from the SEBI.
Oh,
yes.
They've started also?
Yeah. So like Quant has come like in the next week, I think so like first week of October, Ultima, which is like Edelweiss.
Edelweiss.
Yeah, they are going to launch it. Then SBI probably in the name of Magnum, they are launching it. Bandhan Bank is also about to launch. ICICI too also.
आपको जो तो लॉन्च करेगा वो तो छोड़ेगा,
बड़े तो सब
बड़ा है वो तो करेगा।
ना बॉन्ड के म्यूचुअल फंड में तो आपको सारे उसके लिख जाएगा, आपको डेट के साथ मिल जाएगा उसको। साइड ऑफ द बॉन्ड म्यूचुअल फंड वो सारे के सारे बता देगा।
IIFL has a mutual fund? IIFL has a mutual fund?
Not IIFL, it's a 361 man.
Same group, na?
Actually, the group is different. The earlier name was a IIFL Wealth Management, but always a different group. So only the promoter who was like
Nirmal Jain is the.
So Nirmal Jain was just floated this company, but thereafter the whole management was always been done by Karan Bhagat. He is the
Karan Bhagat. So you have the AMC also?
Yeah.
So I think thank you very much. It is a wonderful thing that we have learned, and today both the sessions were so good. And Mayur Bhai, of course, is our member only, and he took the time and give us a product which is very useful. And BFSI, we are looking for this kind of a different learning that is happening to this BFSI world right now, and a lot of new things are coming in India. And once again, on behalf of WRC, thank you very much, and hearty vote of thanks to you.
My pleasure.
And thanks to all members who attended today. And of course, we request you try and give this among your BFSI friends so that more and more members can participate. Yeah, our main intention is to educate and have a knowledge, because we don't have a regular time to read all these things. This also in the public domain, but we have never read this. So this is the time where we can able to take out 2 hours and we can learn those kind of things. And ultimately, of course, we can now have more and more interaction. But thank you, Mayur Bhai. So wonderful things for you. Thanks. Thank you all. So now just for that purpose, of the October 3rd, Saturday is 18th is, I think, the Diwali is starting from 17th. So if you all agree, then we'll keep it on our second Saturday, is 11th. So I think that will be more participation happens. And I think 18th also, if the date is not extended, then 31st October, again, the same issue will be there. So I think better that we'll keep it on 11th. I
Announce that good topic.
So we'll announce also. The Rohit Bhai is already committed that he'll come on for that purpose of the.
And Ramesh Gowde, you have spoke to 3 times.
And we'll have another topic. Yeah. Ramesh.